Yeah. Whoa. I speak. We change lives, Jesus. I speak.
Welcome to the TP Masterclass. On behalf of Cliff Cheqona and the entire TP family, we're honored to have you here. You didn't just join a live session. You stepped into a transformational experience designed to help you master your mind, align your emotions, and trade with clarity and conviction. We'll be starting shortly. In the meantime, settle in and prepare your notepad. Like the stream, subscribe if you haven't already. And most importantly, invite someone who needs this. Because around here, we don't just trade, we transform. Let's get started soon.
I speak life, I speak spirit. We change lives, Jesus did it. I speak life, I speak spirit. We change lives, Jesus did it. Step into my Monday. I'm stepping to my Monday. I'm stepping to my Monday. We change lives, Jesus did it. I'm stepping to my Monday. I'm stepping to my Monday. I'm stepping to my Monday. We change lives, Jesus did it.
What is the TP family, and how do you become part of it? Don't worry, if you're watching this, you're already part of the TP family. Now, before you ask, no, it's not take profit. That's the first thing traders think, right? TP stands for Trading Psychology. When Cliff Cheqona created this community, he didn't want to make it all about himself. He wanted to create a space for traders built around a simple truth. Most traders lose because their mindset isn't ready for success. So what's the TP family? It's not a company. It's not an organization. It's a movement of traders who are done chasing shortcuts, done trading emotionally, and done feeling like they're alone in this journey. Now, let me be clear. We're not here to build another Telegram or Discord group. You don't need more chats or endless notifications. All you have to do is follow our content on YouTube, TikTok, and Instagram. That's where we deliver everything. Masterclasses, podcast clips, mindset tips, and even those hard truths no one else will tell you about trading. Our vision for 2025 is simple: education. We teach traders what really matters, not just strategies, but the mindset behind them. Through our TP Masterclass, podcasts, and content, we make sure traders know how to manage themselves first. Community. The TP family is all about connection, but instead of chat rooms, we meet through meaningful content that actually helps you grow. Tools. We're creating journals, simulations, and practical resources to help you track your progress and improve your trading behavior. The TP family is here to change the way traders think forever. We're not about quick wins. We're about creating strong, resilient, unstoppable traders. Welcome to the movement. Let's make 2025 the year you fix your mind and fix your trading.
It's a mind game. You heard me. Trading is a mind game.
Hi TP family. Hi everyone. Good evening. How's everyone doing? I hope everyone is doing quite well this Saturday evening for another TP Masterclass. So you can put, someone said ready to get more knowledge in the live chat. It's very good to be here once again. So welcome to the TP Masterclass, TP Family Worldwide. My name is Tennessee Shells, as always, and I just want to start off by showing some love and tell me where you are joining from today. Nelson said he is doing quite fine, and I am also doing quite fine. Thank you for asking. Just let me know how everyone is doing in the live chat. And if you are joining us today from either Ghana, Nigeria, South Africa, Kenya, Uganda, UK, US, Namibia, Dubai, where else? Australia, New Zealand, just let me know in the live chat right now. And if you're also watching the replay, just put replay in the comment section below, and then we will just give you a shout out. So we have people from Uganda, South Africa, Nigeria, Abuja, US, South Africa. Welcome everyone. Welcome. I really hope today's, someone said they are from the UK. Exactly, the UK. I really hope today's TV Masterclass will be as amazing as it has always been for you to grab more knowledge for your trading journey. And also, if this is your first time tuning in or joining the TP Masterclass, I want to say a big welcome. Just drop a first time in the live chat so that I can welcome you properly. And when everyone also comes on, they will also welcome you properly. So if you are joining us for the first time, just put in first time in the live chat right now. I just want to bring something up. Yeah. If you are new here, you are family now. And if you are new here, just put like first time in the live chat. And then, we have Nima. I really hope I'm pronouncing your name right. First time. Hi, welcome to the TV family. I really hope you stay with us forever and you don't tune us out. And I really hope you see the transformation that you need to see from us into your own personal life. Welcome to the TV family global. Yay. I wish we had a yay sound so that it would like give Nima a bit of like a welcome to the TV family. Do we have a yay sound or like a clapping sound to just welcome Nima into the TP family? That would be nice. Let me just see if we have it. Yay, we have it. Oh, hi, Nima. Welcome to the TP family. Everyone, welcome Nima into the TP family. And also, if you are new here and you are wondering where to begin, for instance, Nima, do not worry. We have set up a playlist for you. All you have to do is just go to our YouTube channel and you will see a playlist with all the previous TP masterclasses that we have had so far on the YouTube. Where we would like you to start from is that what is really trading psychology. That episode will help you understand why we are doing this and what this community is really, really, really about. Because we don't just talk about charts, we deal with the mindset behind the trades that you take. So this is for you, Nima. If there's also another first time. His name, I think it's a he. His name is Olu Sei. I think I'm pronouncing it right. If I'm not, Olu Shugun. I think that's how you pronounce it. I'm sorry if I'm not pronouncing your name right. Please forgive me. But yes, welcome to the TP family. Olu Sei. Welcome to the TP family. So this is for you and Nima. Just go watch What is Really Trading Psychology. That video will really help you understand exactly what we are doing here with the TP Masterclass. And also from Monday to Friday, we post what we call the TP Declaration. It's just a picture with few powerful words written on it. Here are some example. Like for instance, we will have, I release the limit I have placed on my income. So you just have to repeat this type of declaration over your day before you start trading. We usually post this every morning from Monday to Friday, which is the weekdays that we trade. We also have another first time from Uganda. You don't have a name, which is YGG. I don't know how to make a pronunciation out of that, but welcome to the TP family. I really hope your stay with us is as delightful as this TP masterclass is about to be for today. And yes, so we are done with the declaration. And I also want us to take a moment, like wherever you are, just breathe in, remove every distraction, and grab your notebook or your journal. Don't just watch us today. I would like for everyone to participate with the TP Masterclass from beginning till the end by taking notes or recording some part of the TP Masterclass that resonated with you so that you can replay it over and over again, or you can just come back and watch us again. So this is just a quick reminder to remove every distraction from your environment. Grab your notebook and your journal and participate with what we will share with everyone today. Now, a quick one but a very serious note before I leave. This space we have built so far is for healing, clarity, and truth. If anyone in the comments is trolling, spamming, or distracting others, we will personally remove you quietly from the stream or from the live, and you wouldn't be able to comment or anything else. It's not anything personal. It's just about protecting the atmosphere we have built here for the TP Masterclass, as some people are really here to transform their minds, and we wouldn't want your distraction words to distract them. So please be mindful, please be respectful, and respect this space and honor the process. Okay. The guy said his name is, I really hope you're a guy or a girl, it doesn't really matter. You say your name is Muluba. I don't think I'm pronouncing it right. I'm sorry. And we also have Remy. I am new to from the UK. Hello, Remy. I hope your stay is very, very well. And I really hope you guys, everyone, enjoy today's TP Masterclass. Yes, thank you, everyone. And I will see you guys later on.
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading.
All right, guys. Let me know in the chat, in the comments, if you guys can hear me loud and clear. Let me know in the chat if you guys can hear me loud and clear. Just put some number ones in the chat just to confirm with me that you guys can hear me loud and clear and that there are no distractions. Let me know in the chat. Some number ones and twos, okay? No worries. We'll get started right away. Thank you very much for just confirming that with me. So guys, for those of you that don't know me, first of all, before I continue, I just want to say thank you again to Shells for the opening, and also a warm welcome to every single person who is brand new to the TP Masterclass. It's a privilege to have you on here, because that's just an example or a sign that you absolutely want to grow. Not just necessarily in your trading journey or in specifically to do with trading particularly, but you also want to excel in life. You want to become a better person. You want to build better habits. You want to have a better mindset when approaching trading, when approaching a situation concerning business, or just approaching an instance in life where you feel like you may need a level up. All right. This is certainly the right place to do so. All right. And whilst I go into my topic, I'm just going to introduce myself one more time. My name is Willis Aromi. I've been trading now for coming up to 5 years, and I'm a proud father and a husband. And I'm somebody who's very, very passionate. As I mentioned, I've been trading for 5 years, but I'm very passionate about the markets for a number of reasons. Number one, because of the uncapped earning potential. Initially, of course, that's why I started trading to begin with. But most importantly, especially in the last year or maybe 2 years, I've been so intrigued with the idea of growing. First of all, figuring out my identity. I certainly believe, I'm a firm believer that our identity doesn't necessarily lie in the thing that we are known to do, right? There's a much bigger calling and a much bigger purpose to why we live and why we exist. It just so happens that the vehicle that we have is giving us the ability to obtain certain results, but to also, most importantly, get onto our purpose, the reason why we exist to begin with. That's one reminder I needed to remind myself, that I am not trading, right? I am the person that I am continuing to become. I'm transforming to become. And as I continue to do that, as I continue to focus into that, naturally my trading results are going to alter. They're going to not just get better, they're going to be the best. But most importantly, the people that then see my work, the people that then see the fruits of it, will also benefit as well. All right. So that's just something that I just wanted to put out there, especially if you're tuning in for the first time. All right. And it's something, like I said, I'm very, very passionate about, especially in recent times, about the level of growth and the type of growth that you get to experience, especially when it comes to something like trading. So with that being said, we're going to get started right away. And for those of you that know me very well, especially on the TP Masterclass, I focus specifically on the book review. But we kind of took a little bit of a detour. I wouldn't necessarily go too far to say it's more of a detour, but we're kind of looking at it from a different direction or a different lens, because we spoke about habits. The last time that we discussed anything regarding the book review, we spoke specifically about the habits. And if you are brand new, we're speaking specifically about habits. So whilst we get started, I'm just going to make sure that my screen is shared and you guys can see everything. Just give me one moment. Brilliant. All right. So the reason it says part 2 over here is because a couple of weeks ago, we had leadership in trading and building winning habits. It didn't say part 1, but you can assume already that this will be the part 2. It's not going to be as long as I did it before, but I wanted to focus specifically on certain aspects of building, more of like a practical, I would say. All right. I think it's fair to say it's all great me telling you these things, telling you my discoveries and my findings, but it's also another thing to prove it and to show you an example of what you can implement into your own life, into your own systems, into your own trading specifically, because of course, this is what we're really discussing, right? So leadership in trading and building winning habits. I love this quote at the bottom because this actually comes directly from the book Atomic Habits. And it basically says, you don't rise to the level of your goals, but you fall to the level of your systems, or you fall to the level of your systems. Okay, very, very important. So you're not focusing on your goals specifically. Now, yes, you do need to have goals. You need to have a vision. You need to have something in line that allows you to say, okay, in 6 months, this is where I want to be. Or in 6 months, this is what I want to have accomplished, right? Or in a year, or in 5, or even 10 years, this is the type of person that I want to become, according to, you can finish the rest, X, Y, and Z, whatever your purpose is. All right. And like I mentioned, trading just happens to be a vehicle, something that you can use from a growth and a monetary aspect that you can allow, that can allow you to do so. All right. So let's get cracking. So I've already mentioned, of course, you don't rise to the level of your goals, but you fall to the level of your systems. It's very important to have systems in life. All right. I can give you many examples about systems. I say we have, I'm kind of speaking about myself here, but let's just say, for example, you've got a system for weight loss. I'm going to be very open to admit that it's something that I'm very, very much struggling with. I'm going to be very transparent with you. All right. So I don't want to say that I'm a bit afraid, but I don't know who's going to listen to this after this community. But I am somebody who is very, very, I'm a sucker when it comes to chocolate. You're probably thinking, what does this have to do with anything, right? But it's important that I mention it because it's a cycle that I'm really desperately trying to break. I'm very addicted to eating chocolate, right? I'm not going to go too far deep into it, but let's just say eating chocolate becomes sometimes a habit. When I was a lot younger, I was eating a lot of chocolate that sometimes I'll have it as a main meal, right? And it's not very healthy, number one. And number two, it's not very healthy for the teeth, right? So the reason I'm mentioning that to you is because there might be a system that I need to build in order to stop eating chocolate, right? This might be for somebody. This might be a stronghold or something that you might want to quit in your life that's causing you, number one, to not have your results or the results that you desire to have just in general. Or it might be something as a small habit that you know is not causing you to have good health, a progressive health, if that makes sense. So I just wanted to share that. You might think that this is a joke or stop eating chocolate is simple, but listen, every single person goes through different struggles in life. And if you know very well, when it comes to trading, habits is the real deal. It is the real deal. You're either gonna build habits that you're gonna look to build on, to show up every day consistently and say, okay, I'm gonna need to follow this plan consistently. But most importantly, I need accountability. That's the key as well. Okay, so let's move on. We also spoke about habit formation. It's important that I remind every single person that it's important to have a formation for habits. So broken down, habits can be defined as a routine of behaviors that is repeated regularly that tends to occur subconsciously. Whereas the term formation is very simply put, okay, forming a process, or the action of forming, or the process of being formed. Okay, there's a scripture that says very clearly that I really love. It always takes me back, is be not conformed to the world, and be ye transformed by the renewing of your mind. Okay, I like to focus on the key word there. The key word there is formed. The key word, of course, is transformed. But in the word transformed, I'm focusing here on the word form, to form yourself. Okay, how do you intentionally form yourself? You don't just wake up one day and decide, oh, I'm just going to follow this idea. You actually need to build a tolerance for it. You need to build it up. You need something in place. And this is also something quite important that I would like to share, because when you have something that I guess you're struggling with, you need some type of refinement, or you need something to replace it with. A good example, I am somebody who struggles with eating chocolate a lot. I thought I stopped for a while. And then just because of a trigger, maybe I'm just upset about something, or I'm just very hungry. And in the area that I was in, and I was driving very far, the first thing that I thought about was eating chocolate. And so I decided to buy it. One bite turned into one chocolate bar turned into buying chocolate bars every now and then, although I thought I quit chocolate bars, right? It sounds quite silly. I feel like maybe some people might listen to what I'm saying and find it really silly. But at the same time, if you really understand the perspective from where I'm sharing this with you, it's really important when it comes to habits. You look at habits from the smaller things to the bigger things, because they compound, right? As you already know, how you do anything is also how you do everything. So I did spend the time, especially in the last couple of months, building systems or deciding on things that I need to put in place. So if I don't eat, for example, chocolate, what am I going to now replace it with? Okay, so if I'm now somebody who's approaching the markets with anxiety, how do I now replace it with a process that allows me to remind myself that I have peace? How do I create an environment that looks very hectic, but how do I become a person that carries peace? I hope this is making sense for somebody. So the idea of forming is a process of being formed. So therefore, when it comes to habit formation, you don't only form the habit, but you form the habit so much that it becomes automatic. It's subconscious. You no longer need to think about it. Okay. So, and I mentioned this very, very clearly as well, that habits, they clear the runway for leadership to take off. Once those habits are cemented, or in fact, once those habits are continuous, and it's not a thing that, oh, I need to do it for 30 days, 60 days just to get the results. In fact, you'll see a lot of people, I've done it myself, I'm saying it as the truth, but you'll see a lot of people, what they do is they try to build something just to obtain a particular goal. After a certain time, they think that they've reached a goal, or they think that they've cracked the code. And then pride basically comes before a fall. They encounter a situation that they probably weren't expecting, because they thought they cracked the code after just a couple of days, right? It takes around 21 days or 3 weeks to create a habit or cement a habit. It takes a lot longer to make that a lifestyle. But I'll say this as one extra. It can take anywhere from 6 months to a year to be convicted about that thing. Okay, there's a difference. Somebody just wants to create a habit. That's why you see a lot of people in January, they go and to sign up to the gym. I'm speaking on behalf of the UK. This is like, it's a habit. It's been a culture for a number of years. If you are from the UK, you know exactly what I'm talking about. Gyms make a lot of money in January, because after the Christmas period or the holidays, what do people do? They tend to have a New Year's resolution, right? Or they tend to decide, part of the New Year's resolution is, I want to now lose a lot of the weight, right? From all of the turkeys and the chicken and everything that people have been eating, right? And then as the year goes down, everything just starts dying down, right? But the thing is, when it goes past those 3 weeks, this is where you now begin to create a lifestyle, a discipline, consistency, and then you become convicted about that thing. Sometimes that conviction might be from somebody who has underlying health issues or issues that may cause, unfortunately, some serious things. And because of those serious things, you decide that I need a change. I need to now change my lifestyle. I need to change my habits. I need to change the way I think. I need to change the way I speak. I need to now change the way I live in order to get a better results and never go back to that thing that caused me to be in such a dark place. Okay. But most importantly, when you then create the habit, it's like a runway. You now focus on leadership. How can I define leadership in this particular sense that I've just shared with you? Leadership may look like decision making. Leadership may look like the person who now the habits are in place. I know that this is like my go-to thing. I wake up on time every single time. I go for a run at a certain time. I pray at a certain time. And now, for example, when it comes to trading, I make decisions based on the data or the habits based on the information that I got at hand. All right. So here's the thing. The reason why I'm sharing this information again with you, well, if you're here for the first time, the reason I'm sharing this with you is because number one, it's important, but I also want to give you an example. Okay. The purpose of this segment, particularly here, is to give you an example of something that I've done for my personal trading journey. You guys can take it away, take some nuggets, and maybe have some influence on what you can do for yourself. All right. So systems over goals, or systems are better than goals. Systems, because the system acts as a level of foundation for everything that's to come. Okay. So where you have systems and then you have goals, the in-between is very important as well. But most importantly, you have to start with the system. You have to start with the right foundation first. So you start with the right foundation. So building a system for how you're going to lose 10 kilos or how you're going to start eating more healthy. Okay. How you're going to start replacing the snacks, the sweet snacks that's causing you to have issues. Or for example, you build a system for your family whereby somebody who's very busy, but you don't really have the time to spend with your family because you're busy chasing the money that might even cause you to break your relationships with your family. Does that make sense? So you need to build, it's important. I won't mention the word system so many times, but it is very, very important to have systems in place. Okay. Once you have the systems, then leadership begins to take place. You now start planning. Now you start planning your trades. You plan the trade and you trade the plan. You make decisions based on, is it a good day to trade or is it not a good day to trade? Okay. You're always evolving because you're always improving your mindset every single day consistently. In fact, whilst you're doing this, what you don't actually know is that you are developing into a person that you've probably never seen before because of that discipline. Okay. You also need to remember to apply these principles constantly on a regular basis in order to obtain the goals that every single person is trying to achieve as well. All right. So with that being said, I want to show you an example. In fact, before I get to the example, if you guys have been listening very, very clearly to a lot of the things that we've been sharing, and you implement it and you apply it, you're going to get the results. You are going to get the results. I can happily and confidently say, not to say, oh, why was I not profitable in year one? Look, you can listen to as many stories as you want. Nowadays, I'm hearing maybe a few stories here and there of individuals after 6 months getting a prop firm payout, becoming profitable with trading, turning £50 through consistently growing the account, proper risk management, and growing it to £500. Of course, with the right guidance, with the right mentorship, people join particular groups that they have okay signals and whatnot. They have risk management plays in place and so on and so forth. Great. We hear a lot of testimonies and stories here and there. But specifically, I'm speaking to the person that's really solo, that wants to really be serious, put this in play. Maybe somebody who wants to become a full-time trader as well. All right. But the majority of people, especially in the last decade or so, the stories are consistent. The stories are, I spent 2 years losing a lot of money. until I figured it out in year 3. I spent, in my 5 years of trading, my first 4 years, I lost a lot of money because I didn't get it. I had poor psychology, or I was strategy hopping, or the strategy worked. I think my psychology was okay, but I probably wouldn't know. But in fact, my risk management was completely off. And because of the risk management, that plays a lot into your psychology as well. All right. So the reason I'm sharing that with you is because it's the same like me. I've been trading for nearly 5 years. And in my, I would say probably my second or my third year of trading, I decided I wanted to be very serious. Okay. I wanted to be very serious about trading. I sought mentorship because I knew that me investing in mentorship, proper mentorship and guidance is going to be one of the biggest investments for me personally. Moving forward, I decided to apply a lot of things. I back tested a lot. I live traded a lot. I did win, make some money. I lost a lot of money. And then I think probably about a year or two ago, I decided that, look, we're going to always run around in circles and circles and circles until we come back to the very thing we're running away from, which is having the system. Okay. So I shared with you to begin with, I said, if you've been listening very carefully to a lot of what we've been sharing and implementing it, you will get the results. One of the segments that we had a couple of weeks ago for the Dubai TP Masterclass edition was, I can't remember if it was systems, but this is the thing that I remember. Your structure, your system, or your edge rather, is made up of 3 different things: your risk management, your strategy, and your psychology. Okay. So can be broken down whatever you want. You can have your psychology at the top, your strategy in a different place. But fundamentally, this is what your edge, quote unquote, should be made up of. Okay. Your risk management, your strategy, and your psychology. I'm going to be sharing with you probably a lot more of the risk management and the psychology as an example, something that I created, okay, for myself, that always can be tweaked and refined, but you guys feel free to take it from yourselves and gather some ideas. Okay. The strategy, maybe I'll talk about it at the end in terms of how to go about a strategy. But it's more so about understanding that you need to have something in place, especially that works for you. This is where your edge is going to come from. So when we talk about the risk, the psychology management system, this is what I've decided to call it. I don't know if you guys can see it very well. Do let me know. If you can't, that's fine. I'll find a way to maybe enlarge it. But the idea really here is you need to have a system for everything. So what in fact is my system, my psychology system? It means I'm holding myself accountable to certain principles and things I have to do in order for me to trade. Okay, somebody already said they can't see it, so I do apologize. Just give me a sec. Is there a way I can make it large? What I will do is I'll read it as much as I can, because I'm not sure if I can be able to zoom it from here. But I just want you to get the concept here. I think maybe the information is not as important, but the information is very important, is what I'm saying. Apologies, but I'll find a way. If I share something like this again, I'll make it a lot bigger. Okay. So do apologize for everyone that can't see once again. But for the sake of time, the psychology management system. So first and foremost, before I get into the psychology management system, I ensure that I have enough time before the session. Why? Because I want to have enough time to pray. Okay. Why am I praying? What's the purpose for me to even pray to begin with? Number one, I want to get into the session with a clean heart and a clear mind. Okay. But most importantly, I understand that my purpose is much bigger than me going into the charts and trying to collect some money as well. Okay. It's basically being in line with that, but also leaving time for preparation in the charts. I don't want to just hop into the charts by the time I'm starting my session and look for 1 or 2 setups. Okay. So if you're wondering what I'm talking about, it's the yellow highlighted text that you can see. You probably can't see the writing very clearly, but I've highlighted a bit at the top, which shows the pre-session priorities. That's what I've called it. Okay. So that's done. And then number 1, the mental state. So you can do this via Notion. You can do this via a sheet of paper, a book, a diary. It's entirely up to you. But I make sure that these are things that I assess or observe before I get into the session to keep myself accountable. Okay, so number one, environment and mental state. Okay, every single time I'm getting into the market, am I approaching the market from an angry state of mind? Am I angry because of something else? Let me just see something. Just give me 1 sec. Okay. Hopefully I can do this now. Okay. Let me know if you guys can see it better now. Right. Let me try and share my screen again. It probably comes up the same. Ooh. Okay. So it's probably going to be the same. So once again, I do apologize. So just bear with me as I continue. I'm just going to read as much as I can, not just for reading purposes, but again, I want you guys to understand the structure of where I'm going. So number one, your emotional state before you get into the market. Why is that important? Because you don't want to trade negatively or with a heart or a mind that's not right. You don't want to do that. You want to approach the markets, hopefully with a clear mind or with an expectation that you're here to find opportunities. You're not here necessarily to gain profit. As good as your strategy is, the mindset that I have is I'm here to find opportunities that if they do show up, I'll take the setup and then take the trade. All right. And then, of course, you also want to observe your environment. If I know that I'm busy doing something, or I've got maybe 30 minutes before the session opens and I haven't done my pre-session priorities, I'm just not going to trade. I've been at that place before where I was desperate to trade. I'm rushing just to get to the market. And believe me, there are days where I have blues. There are days where I have red. But most of the time, I feel very rushed and flustered. I don't feel great. I feel like I've been gambling in the markets. Does that make sense? So I want to approach the market, number one, with enough time before the session. Okay, especially if you're taking it very seriously, if you're taking trading very seriously. Okay, and then you want to observe your environment, your mental state. That's the most important thing. Now, I've added something here which I've probably never done before, a mid-market check-in. Okay. Now, of course, you're probably watching the market. I'll probably be in the market. So it's like, okay, when do you have the time to stop trading and then type it? Well, I record myself via a voice message so I know I can type it in later. And then I can observe a lot of the things that I was feeling during the market. It's quite interesting and fascinating because we don't often talk about these things. We just assume we're going to get into the market and get out and we're going to be okay afterwards, right? So what I've written down for point number 2 is current market check-in. So am I focused or am I distracted? Is there noise in the background? Is somebody trying to speak to me whilst I'm on the charts? Okay. Have I decided or diverted my bias? If I've gone into the market and I've decided that, hey, look, I have gone for a buy, but for some reason I feel like it's going to be a sell because there's momentum somewhere else. Have I diverted my focus? Am I patiently waiting for confirmations? Do I feel that there's much of an opportunity? Am I tempted to trade anyway? Is there much of an opportunity to trade, or am I just tempted to just trade anyway because I've showed up to the session? Okay. Do I feel excitement? Am I calm? Do I feel FOMO, greed, anxiety? Am I optimistic or am I very doubtful? Do you know what's so interesting about the word doubtful? Because you could have been doubtful for something else that has nothing to do with trading. But because of that spirit of doubtfulness, you might bring that into the trading session and it shows up as doubtful on your original bias. I'm saying it because I've done it before, right? I had doubt in my mind because of some other situation. I've come into the market. I've seen a very clear entry, for example, for a buy, and I didn't take it. So now I'm having to look for a secondary entry that might not possibly even come anymore. All right. And then number 3, post-market reviews. That's also very important because you want to assess and analyze what other opportunities existed. It's almost like a form of back testing, but more forward testing. It's kind of in between because now you're going back on what the market presented and what you did right and what you didn't do right, and maybe how you were also feeling in the moment. Okay, these are very important things that you can build habits. Again, I'm going to reiterate this. I'm sharing this with you as an example. Although you can't necessarily see the text, I'm giving you this as some sort of framework or guide for what you can actually do for what you can actually do for yourself in terms of building a system. All right. So that's that. And then another example is your risk management playbook. Again, this will vary depending on what you trade, how you trade, and also the type of person that you are as well. Okay. So for example, I'm somebody who trades, someone who trades indices. Okay. Somebody who trades indices for the last year or so. And I have a protocol that I utilize. Some people might look at me as a day trader, more of a scalper, more short term, but I have rules in place that if it doesn't fall within this structure, there's no point of taking it. And just for the sake of time, I'm going to share maybe just a few bullet points out of this system, just to give you an idea. But in terms of risk, I'm always only looking to risk 0.5% of the account balance. Okay. But let's just say for whatever reason, I take consistent losses back to back, maybe let's just say 3 losses. I then reduce my risk just so that I can have many opportunities to recover so that I'm not over leveraging or over risking, for instance. Okay. Now you might look at 0.5% or 0.25% as, okay, well, this is really small. What's that going to do to a £500 account? Okay. It's all perspective, because the day you do decide to get a bigger funded account, or you do decide to get bigger account or compound your profits, or maybe you have access to money that you can now trade with in the longer term, the structures that you put in place now will have a big effect on how you trade a lot later as well. Okay. So then I have entry protocols. I have the amount of trades that I take during the session, and I do not go past that. If I do take one more trade past the permitted trades that I'm allowed to, I will analyze it and I'll actually see that I've been gambling. I feel different. Okay. And then last but not least, a trade management system. Do you break even after your trade goes into profit? If you're doing a 1 to 2 risk to reward. Okay. So like I said, this is just a framework. This is not, this is how you do it type of trade. This is an idea that when we're talking about everything we're discussing about the habits, the habit formation, everything that we've discussed in terms of the book segments, a lot of what we talk about when it comes to the edge, I just wanted to remind every single person that you will only ever be as good as the last instruction that you followed or didn't follow. All right. So a lot of that we're saying here, what have you taken from it? What have you applied? Has it worked? Have you even created a system? Have you considered even creating a system to begin with? So what we are saying here is we're not just talking out of thin air. I just wanted to share that with you, that this is just an example of things that you can implement, things that I've implemented for my own personal trading journey. All right. So that being said, this was just a segment just to cover some of these fundamentals for me. This is something that's been working for me. We're going to really discuss a lot of the topics that we're going to be discussing. But in fact, a lot of the things that I'm going to be reading from the book Atomic Habits, hence the habits. But most importantly, for the next couple of weeks, we're going to be discussing the structure of how we're going to be implementing certain things and certain practical things that you guys can implement, especially in your trading journey. Guys, once again, my name is Willis Aromi. Thank you very much for tuning in, and I hope to see you on the next session. God bless. Peace out.
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading.
I think big, I dream big, I trade smart. My thoughts align with wealth, success, and abundance. I deserve success because I work for it and stay disciplined. I let it go of doubt. I let go of fear. My mind is renewed every day with wisdom and strength. I focus on solutions, not problems. I attract profitable trades and opportunities. I am a successful, focused, and profitable trader. I am unstoppable and I am victorious. I am grateful for every opportunity to trade and
Hi everyone, I'm back again. We're just waiting on Mr. Kema to be ready, but I really hope everyone learned something from Willie's session. It was great. I really did enjoy it. Talked about habits, and I really hope everyone take the time to rewatch that session so that you can build good habits that will accompany you on your journey. So I just want to come on here and just give that quick reminder that I always give, and which is this space is built for healing, clarity, and truth. And if anyone in the comments is trolling, spamming, or distracting others, we will quietly remove you. It's not anything personal. When we do that, please don't be angry at us. It's not anything personal. We just want to protect the space that we have built here so far. And I really hope everyone respects each other on this live stream and not disrespect one another. So let's keep the distracting comments to ourselves. And yes, so without any further talk, let's just bring Mr. Kema on. Thank you. Stay tuned for more.
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading.
Hello, wonderful people out there. A wonderful Saturday. If you can hear me, just give me some ones in the chat area. If you can hear me loud and clear, kindly give me some ones in the chat area. Okay, thank you so much, Chara. Yes, Chara. Nelson, thank you so much. CEO, thank you so much. I really appreciate you all. I really appreciate every single one of you for being here every single week. If you are new here, you are welcome to the team. You're welcome to what we do here. Basically, we transform minds, and we believe strongly that once an individual's mind is, like transformed one way or the other, that person can now, transcend that particular transformation into their personal lives, how they do things, how they apply certain principles in their day-to-day activities. All right. And so let's move on. Today I'm going to be talking about something really very interesting. But even before that, great. So Bounce, you can bring, you can share my screen. All right. So today I'm taking you all the way through, like something very interesting. I'm talking about the 7 immutable principles of discipline. We started something really interesting last week. We were talking about cultivating patience for a long-term, success. I didn't really want to tie it to trading per se. I wanted it to make it general, right? Whereas an individual who is not necessarily, into trading could actually take those particular information and then use it for themselves and then still be able to move forward with it. But first of all, I want to be able to go into the chart, let's just go into the chart. Let's just open up some few things. Let's just unravel. Let's see how things are panning out in the chart. And then from there, we will come back to this area. It's very short. We can go through it quickly. All right. So if you can see my chart, let me know. If you can see my chart, let me know. Give me some ones. If you can see my chart, just one person can just do something and then let me know you can see my chart. Great. Thank you so much, Chara. All right. So when it comes to trading, all right, one of the main things that I would like to communicate to each individual, right, is the fact that you have to try as much as possible to have an interest in this area, because like if you do not have an interest in this area, it's going to really bore you and eventually you're gonna fall out, right? But even to that per se, I would like to also add that one way or the other, I did not just come into this space and then basically like start going forward. It wasn't really working for me until I started implementing some very, very key principles. And these key principles, I personally believe that my eyes were opened to those principles by the Holy Spirit, because I had, constantly prayed about it, and I wasn't really moving forward. Like there were things that were not really adding up. A lot of people are picking trades in the market. It's not really going that well for me, but I'm seeing that it's going well for these individuals, and I keep asking myself certain questions. At the end of the day, I had to sit down, go into the chart. So as much as I was praying about it, I also put in my own work, because the Bible says what? Faith without works is what? Is dead. So at the end of the day, I put in the work for myself as well, as much as praying. Okay, I'm watching the chart, but show me, because you can be watching and not see anything. All right, you can be watching, you can open your eye, you have your eye clear, and you will not be able to see anything, right? And so at the end of the day, that I needed that open eye for me to be able to see certain things in the market. And once I saw it, now it became my mandate to be able to communicate it to the outside world, right, and give it out there to the many who are willing to adhere to whatever it is that we are doing, right? So at the end of the day, take a look at something interesting. Probably some of you have come across this. This is the DXY. DXY is simply dollar index. Now, what a dollar index does is it serves as an information for an individual. What kind of information does it give? It gives you the information of whether the dollar is decreasing in value or increasing in value. How would you know that? You have to be able to be attentive to the chart. You have to be able to research. How you understand? So at the end of the day, I researched, I realized, and then now I'm using it. Now, one of the things that happens is if you're watching this chart and price is pushing towards the upside, right, like that, price is going towards the upside. What it basically means is that the value of the dollar is increasing. And then if you see price moving towards the downside like that, what it basically means is that the value of the dollar is decreasing. And this chart that we are looking at right now is what is actually showing it to you. Technically, you are seeing the value drop technically. Now, what does that mean for a trader, or how can that help you and your trading, or your journey? How it can help you is the dollar is one of the most traded currency pairs. In fact, 90%, if you gather about 100 people, you realize that 90% of the people who are trading within that 100 people that you have gathered actually trade a currency pair, or actually trade an asset that has or is tied to the dollar. It's either the dollar is the base currency or the dollar is the quote currency. Now, for individuals who do not understand what base and quote currency is, let me just quickly do a quick study with you. All right, base, and then what? And then quotes. Right now, how you go to your forex bureau and then basically you're having a kind of currency and you want to go and exchange it into another. Usually the currency that you have has a value of 1. And so, for instance, if I'm going to, in my country, if I'm going to a forex bureau and then I'm going to say, okay, so I want to exchange a dollar into cedis, what I'm going to say is, how much would you give me for a dollar? So the dollar in that particular moment is my base currency. The base currency always has a value of 1. Always has a value of 1. So it's what? The base currency against whatever you are going to exchange for. So what you are going to exchange for is the quote currency. So in this case, CD becomes the quote currency. And then you realize that the CD comes as what? As maybe they tell you right now it is 11.5, right? So let's run it up to 12. So what it means is that if I'm having $1, I will get 12 CDs. So now if I come onto the chart, how that will be represented is if I go to USD Ghanaian cedi, the USD will be the first quoted currency. So USD Ghana cedi means that the first quoted is the base currency. The next one is the what? The quote currency, right? So if I click on USD against the Ghanaian cedi, this is what you are going to be seeing. All right, this is what you are going to be seeing. I've done some few analysis about our president's, assuming position and then how the CD value has been going so far, right? And in the past government, we had price rally all the way from 4 cedis and 30 pesos per dollar all the way to 18 cedis and 83 pesos. And now in the current, sitting government, we have price gradually declining. But we might not necessarily per se say it's because of the government, right? It might be because of certain factors. So at the end of the day, when I come onto the chart, you see this area. This area is where the quotes are. So the base currency, which is here, which is the dollar, the first listed currency, has a value of 1. And then where it is or where the chart is sitting currently represents how much, if you go into the market now, how much you're going to get that price for. So here is saying what? 10 cedis and 50 pesos. You can see that. That is the current price. So if I'm having $1, I should be able to get 10 cedis and 50 pesos for that $1. But then again, it is just what? It's just chart. You know, like because of this jurisdiction, it becomes just chart. Because if you go out there, people are giving it out for 11 cedis, 50 pesos, 12 cedis, but it's around that same. And it depends on the kind of broker that you work to. And then if you hover your mouse around this area, what do you see? You see what? GHS, meaning that what actually is here is the quote currency. You understand? And so the cedi is what it will be quoted as. So now, what if we are going to GBP USD? It means that GBP is the base currency. GBP being the base currency here means it has a value of 1. And so we are saying that if I'm holding £1, how much will I get in dollars if I'm going to exchange? And then you will come here, you take a look at this, you will see USD. All right. And that means that this what code is in dollars. So if you come here, where is price sitting currently? Is sitting at 1.34. It means that if you take £1 now and go into the market, you should get somewhere around $1.34 for that £1. How do you understand? So coming into the chart, it's very easy unless you get someone to explain it to you. You realize that it wasn't so complicated as it seems, right? And that is the same way that when you come onto the DXY, it would also basically open your eye to how market movement is actually from time to time. Now, coming into the DXY back again. If DXY signifies the value increase and decrease in the of the dollar, right? Value increase and decrease of the dollar. Then it means that if I'm watching price drop towards the downside like this, whatever pair that is tied to the dollar should have a certain kind of effect. Now the question is, what kind of effect should they have? And if I'm seeing price go towards the upside like that, then whatever is tied to the dollar should have a certain kind of effect. What effect is it going to have, right? So quickly, let's go through that. If DXY is going towards the downside like this, then what happens to pairs that are having USD, so USD XXX. So pairs that are having USD as a base currency, and now what? XXX represents the quote. And then what also happens to pairs that are having what? XXX, and then what? USD as the what? As the quote. So XXX mean whatever pair being the base currency and the USD being the what? Quote currency. So at the end of the day, if it is dropping towards the downside, let's use that because currently that's what we are having, price dropping towards the downside. If it is dropping towards the downside, then it means that we should what? See the value decrease. If the value is decreasing, then it means USD XXX pairs are also going to be dropping towards the downside since the dollar is the what? The base currency. So the dollar is what is losing value. You can see that. So on the chart, I should see any chart representation of USD being base currency and then what? XXX dropping towards the downside. So let's see some of those examples. So an example would be what? GBP USD, right? No, an example USD XXX. So an example of such would be USD Canadian dollar, right? Because USD is the base currency, Canadian dollar is a what? It's a quote currency. So let's go open up USD Canadian dollar and let's see something interesting. What do you see? Prices dropping. And guess what? In the last two candles, did you notice something interesting? The last two candles were bullish candles around that area, right? Let's go to DXY and let's take a look at that. The last two candles, you can see an indecision candle here, and then now what? We have a bullish candle around that area. Now let's go to USD JPY and let's see that. Is it also dropping? Great. Yes, it's also dropping. And you can see that coming towards the downside, and just around that area, we are having what? That roller coaster or consolidation around that particular region as well. So what it basically means is that whatever is happening on here or we are seeing here is actually having effect on the pairs that we are trading. And therefore, if you are trading such pairs, you can actually use the DXY as an area of interest to see what could happen next in the market. And basically after this, I'm going to talk about that. So let's see what then happens to pairs that are XXX USD, right? What then happens to pairs that are XXX USD? XXX USD pairs means that they are base currency, then the USD comes as what? Quote currency. So as for those ones, we might probably see them what? Shooting towards the upside. What examples are pairs, like that? We have GBP USD, Euro USD. So they are supposed to be going towards the upside whilst what? Dollar is dropping value. Because whilst dollar is dropping value, those other currencies might well be pushing, or the value might be over the dollar, and therefore we could see that they are climbing towards the upside. So GBP, we come in here, what do we see? We should see price going towards the upside. So you can see that towards the upside. Euro USD, what do we see? Going towards the upside, right? Going towards the upside. And then you can see that final area as well, showing that kind of what? Reaction, or an equal reaction that we were having on that same area around this particular region. And this is one of the key elements that could help individuals who are trading, like some of these pairs that are tied to the dollar. I hope you understand. So that was just by the way. I just want to use quick 5 minutes to talk about the gold market, and then probably we'll just come and run through this area. We don't have much time at all, but let's utilize what we have. All right. So coming into the gold market, I could see market rallying towards the upside. Very interesting, right? And then at this point, someone will ask, okay, what exactly is gold doing? One of the things that I love doing is my top-down analysis. My top-down analysis helps me to be able to know where exactly I'm trading within at a particular moment, right? So you can see this low point that I have here in the market is basically the low point from April. And I know because I've done my top-down analysis, right? And then this is the high point of April, which price hit $3,500 per ounce of gold. And after that, price has dropped and relatively playing within this region. Some of you trade gold, or you say you trade gold, but you didn't even know that price after April has neither crossed that high or even reached that particular low. I hope you understand. Now, one of the things you must be very vigilant about it. You must be able to read meaning into the pairs that you trade. Make sure you know about them. Now, the next thing is, around this area, you could see that there are some rejections, right? Constant rejections. We have had that rejection around that area 3 times in a row. Now, about resistance and support areas. A resistance area in the market is basically an area that has been rejected, or price has been prevented from moving further towards the upside. It's as simple. And then there's one principle that we talk about, that if an area is rejected, whatever rejected that particular area might be there to reject the area a second time. And so once an area is rejected, we are very careful whilst we are getting into that particular area, because whatever rejected it the first time could be there to reject it off again. And when price keeps tapping into a particular area over and over, usually we talk about the fact that, within the 4th or 5th time, we should see a break towards, like the upside. It means that price keeps testing that area, going back, coming to test that area, going back, coming to test that area. Within the 4th or 5th time, probably it could be a break. I would understand. But I don't just rely on that to say, okay, because of that, price is going to break. I rely on other technical factors, right? Now, at the end of the day, price is now coming back into that particular high after retesting support area here. And we are now having. So the question is, will price be able to, break through this region? As for that, I don't really care. And I don't really know. Price is going to do whatever it's going to do. But what I can say is price is in a bullish momentum currently, going towards the upside like that. And this is the daily time frame perspective. So I am not coming in to basically say, okay, so, price is going to reject off this area. No, as far as price is in motion going towards the direction in which it's already going, we should allow price to unravel until it shows clear signs that there are weaknesses around this area and, dropping. Then now we can basically say it's rejecting off that area again. We should see price dropping towards the downside. But for now, what I can vividly say is, based on my thesis and based on my top-down analysis, I was looking at price moving towards the upside and reaching this particular highs again. And so this particular rally towards the upside gave me the affirmative that we could have the possibility of reaching there. This is a doji candlestick. A doji candlestick is basically an indecision candle. It means that market neither went towards the upside nor towards the downside. So what happens is, usually you should look out for what will come next. But what will come next is based on what? Information. And that information says we are already bullish. And that being said, it means if an individual was looking to jump into the market, I would probably have advised that they would be in the market within these particular areas, right? And then this would have been a continuation, which means that if in case market should come back into that low regions here, I'm gonna take it as, you know, like a charity option for the market, giving me another option to be able to jump in on the market, enter, and then now I'll be looking for continuation break towards the upside, right? That is what I will be looking out for, and that is based on my thesis. And so when market gets there, the next thing that I do is I look out for my entry criteria. And I think that everybody should be able to have an entry criteria. Whatever strategy that you trade, at least make sure that these three main things are conk. You don't leave them out of your trading. One, why you enter the market and how you enter the market. Two, your stop loss point. After you have entered the market, you could be wrong. So accepting that you could be wrong is a key element in trading. And therefore, if you are wrong, how much do I lose of the capital that I have in the market? Then you basically talk about risk management and then risk assessment. Then three, if price indeed is going my direction, where am I looking to get down, right? It's not always that you are going to board a ride and then go all the way to the last stop. Sometimes there is a particular point that you need to get down, and it all depends on why exactly. All right. So there needs to be a why before you be able to know that, okay, so because of this and that, I think I'll get down here, and then you should be able to have that. So these three components, every strategy should be able to have: your entry criteria, your exit criteria, basically your stop loss, and then your take profit point, or where exactly you're going to be taking profit. And then one key thing, never ever take lower of a profit than what you're actually risking in the market. I think basically with that, I could say we have talked about this a bit. Let's move back into this area, and then let's talk about this. All right. So if I'm not able to, get through with this, definitely next week we are going to come back and then we are going to continue. But 7 immutable principles of being disciplined or cultivating the patience for a long-term trading success. What are these? I'm going to just state the first two or first three, and then basically that is it. Principle of purpose. Every single person who comes into the market, please, I beg you, have your own why. Have your own why. The moment a lot of people begin to have their own whys in the market, guess what is going to happen? Those statements like no risk, no rally, no risk, no rally, it's all going to die off. Why? Because you and I know that you never had a rally on your plan. You never had a rally on your plan until you heard someone say they have bought a Lamborghini or they have bought a Ferrari. You probably didn't even have it on your plan. I'm not saying don't dream big. I'm saying that have your own goal and personalize that goal, and stop picking other people's goals just because it makes them feel good. You want to add it to your list. Have your list and stay true to your list. All right. So have your why. Someone's why of coming into the market was because they wanted to get a Lamborghini. That might not necessarily be your why. You are probably into different kinds of vehicles. Have that, own it, let it be yours, right? Let it be yours. Then knowing your purpose gives direction to your daily choices. If you are an individual who is driven, you are purpose driven, it makes you be able to know exactly where you are going. You have direction. If because I am going for shopping, I will get down at the mall. It's as simple as that. And so when I get to the mall, I need to get down because I'm going for shopping. But if you do not have a why you are sitting in the ride in the first place, guess what? You are even going to be confused about where exactly to offload certain kind of things. How do you understand? Then principle of consistency. What you give process to is what shapes your outcome. What you give process to is what shapes your outcome. So please be truthful to yourself. What are you giving? What are you giving process to? What are you giving process to? I was on a space this morning with some of my Nigerian friends on Twitter, and then we were talking. I was basically talking about one thing that a lot of people do. You wake up and the first thing that you do is you pick up your phone and then you watch trading. You don't even check whether you can walk first. My goodness. All right. And then we can also talk about small habits making great impact. One of the books that I would recommend for a lot of you, this is aside the book that we are reading for the month, so you can pin it down for later. All right. Atomic Habits, great book. All right. Atomic Habit, a great book. Let's move on. Principle of sacrifice. Say no to good things now so that the best things can manifest. Some of you see very good opportunities. Great. Yes, we know. But sometimes, that the best opportunities comes when you turn out the good ones. So sacrifice is basically turning down something that you feel like it could be good, right? For something that will be better, something that will be best, what to be able to manifest. Greatness sometimes demands putting your comfort aside, right? Then we talk about the principle of accountability. One of the good things that I can't say less about is having a partner. You know, when you are going on a particular process, this is one of the things that helped me the most. I was talking to Cheqona about it, and I told him that one of the things that helped me the most. See, there was a point in time when I stopped working, and I will not recommend this for anybody because I knew the hardship that I went through. I stopped working as I'm focusing on trading full time. My goodness, if it wasn't because of partners that I had, right? If it wasn't for people that were around to gradually help along the way. Okay, oh, this is food, let's eat. Guy, I go hungry. I go hungry. X. You get me? But I had people to support. And sometimes it is very, very key for you to have somebody to overlook your work and say, oh, let me see what you have done. It is a sense of accountability. Let me see what work you have done. Because if you are the one who is marking your own work, honestly, sometimes you will not be truthful to yourself. It's as simple as that. You will not be truthful to yourself. Be open to constructive criticism. There are two main kinds of criticism. We have constructive criticism and then destructive criticism. Destructive criticism, an individual basically can watch what you are doing and then basically just twat it. Hey, what are you doing? You know, it's nonsense. You know, get out of here. And there's an individual who come and say, you know what you are doing is nonsense. See, you know, there's a way you communicate a particular thing, but it sounds different. For instance, a woman, you know, for instance, there's a joke that I heard about sexual harassment, and they said, you know, in the court, they are reading what the woman said, and they say, no, stop that. Don't touch me. You know, I don't like this. And the guy is saying, no, that's not how she said it. She said, no, stop that. Don't touch me. You know, I don't like this, right? These are two different communications. But at the end of the day, what we are reading is basically what we are reading. We are reading, no, stop that. So you say that she tried preventing you to stop it and you didn't stop it. I mean, you know, so guys, this is the cue to you, you know, right? So now be open to constructive criticism. There's a way an individual will communicate it. And if you're also criticizing someone, make sure it's constructive and not destructive. Make sure you're not twatting the person, bringing them down, making them feel like, you know, what they are doing is not necessary or no. Have patience for the person. Know that they are doing something foolish. Even the Bible will tell you, you know, like it will tell you when you are being foolish, but it puts it in a nice way. I hope you understand, right? Create an honest environment, right? Let me just finish. I have about two more. Principle of focus: cut out all distractions. You know the distractions, like you know your distractions. What will be a distraction to me might not necessarily be a distraction. That's what I'm saying. You know your distractions, because someone will say playing music whilst trading is a distraction. No, when I have classical music on, when I have jazz on, you can ask my wife. I am in groove. Classical music is, you know, like one of the music that is tied to brain power. I mean, I'm head over heels. All right, I make the best decisions. But someone else is going to be a distraction. So you know your distractions. Please cut them out. Sometimes there's too much noise. Sometimes a lot of Telegram channels that you are having, and you need to, you know, do away with a lot of them. How do you understand? Yeah. Even if you think my Telegram group is not helping you or doing things that would actually help you and it's basically distracting you, cut it off. Get out of it. You know, like it's not everyone that is going to be in line with a certain way. How do you understand? Or a certain ideology, and it's very, very easy to understand and very, very, you know, good to know, right? Give thought to what supports your goal, and basically you are on the run to doing great things. And then the principle of routine. Good systems, my good people, remove the need for motivation. Some of you need motivation to do certain things. If you need motivation to do certain things, you shouldn't be doing it in the first place. If you need motivation to do certain things, you shouldn't be doing it in the first place. How do you understand? One of the things that you must understand is that the principle of routine helps you to be able to cut out motivation, because you know exactly what to do. So nobody has to come in and then say, go. You must, like, you can do it. You can do it. You can do what? You can do what you are supposed to do. Please shift, I beg. go and then do the thing because it is what you are supposed to do. It's as simple as that. I don't wake up and then basically my wife has to come and tell me that, babe, we need things in the house. You have to buy things. No. She doesn't even speak. All I'm going to say is, babe, I haven't gotten the list for this month. Please do it, right? She brings it. I'm like, babe, prices are not a part of it. I want to see prices. I want to see prices of the things. I want to quantify everything and then give it to you in a lump sum. Then she goes do that. Okay, then I do my role by what? Okay, this, that. Okay, no, babe, please, this month, let's take out this. This month, let's take out this. Okay, this is what I can give you for now. Then I basically give it to you. And then you basically go do. Nobody has to come and tell me. If you have to hit your chest to, show that you are the man of the house, then probably, it's in question. I hope you understand. It helps you also with your self-awareness, right? To be constantly aware of what you are doing from time to time. All right. Then finally, the principle of progress. Direction matters a lot more than flawlessness. What you must understand is that we make wrongs. A lot of people in the market, they make it seem like there's no wrong in here, or they don't do wrong things. Trust me. I'm not going to speak for anybody. I make a lot of mistakes. I make a lot of wrongs. Sometimes you can trade Monday, Tuesday, Wednesday, Thursday. You make good profits in the market. Friday, you don't know what exactly happened. Some unnecessary whisper from somewhere. Add 2 lot sizes. The money will become plenty. Add 1 lot size. The money go chow. By the time you realize you are doing something that you did not intend to do. So the Bible says, even Apostle Paul said, why do I always do the things that I said that I will not do? It means that no matter who you are or no matter the height that you have risen to, it is very, very easy to make mistakes at certain points. And we should elevate and see these mistakes as what? Stepping stones, rather than things that are there to cast us out, all right, or trip us over. Ladies and gentlemen, thank you so much. My name remains Emmanuel Napo Ado. I am popularly known in the trading industry as Kema Trades. If you need any help, we are here to always help you. And basically that is it. I'm handing over to Clifford Cheqona. Thank you so much.
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading.
I think big, I dream big, I trade smart. My thoughts align with wealth, success, and abundance. I deserve success because I work for it and stay disciplined. I let it go of doubt. I let go of fear. My mind is renewed every day with wisdom and strength. I focus on solutions, not problems. I attract profitable trades and opportunities. I am a successful, focused, and profitable trader. I am unstoppable and I am victorious. I am grateful for every opportunity to trade and grow. I give thanks for my progress, my lessons, and my success. I attract prosperity and I steward it wisely. Every day, I am becoming a better trader. My trading provides freedom and abundance. I speak life, blessings, and success into my trading journey. I am grateful for the wisdom to manage risk and profit. I celebrate my growth and resilience. My heart is full of gratitude. My mind is at peace. I am prosperous in my thoughts, my trades, and
Hello, ladies and gentlemen. How you all doing? Good evening, good morning, good afternoon, wherever you're tuning in from. If you can hear me loud and clear, kindly drop some number ones in the chat for me, please. I was just laughing because, the last part of the declaration says, I am prosperous. And I believe it. I receive it. I believe it. I receive it. How are you guys doing? Bring this one up. Let me see. Hello, Cliff. I scheduled for a 2 hours consultation session. You don't have to reschedule. Don't worry. Just message the team. They will message you for me. Just make sure that they don't schedule you during the weekends, because the weekends, I want them to remove it from the schedule. I don't want to have a meeting with people on the weekends, unfortunately. So just make sure they schedule it between Monday to Friday, okay? All right. All right, guys. So I hope you guys are doing well. Let me say hello to each and every single person. Okie dokie. All right, guys. First of all, I just want to say, I was here just laughing at Kema's teaching. Very, very powerful one. Because of time is not on our side, sometimes we have to rush into things, but I was actually enjoying it. The whole entire example about the court case, I was laughing because it's true. As human beings, sometimes we don't realize how we see things from our own perspective. And perception is everything. And we talk about this all the time. It was a very good session, very, very good session. And I think that if there is anything that I took from there is about the understanding that in every single thing that you do as an individual, taking ownership for your transformation is very important. If you guys learned a lot also as well, just acknowledge. Let's just even say thank you to the whole team, from Shells to Willis to Kema. I just want you guys to say thank you to them. You guys already know that, they all put in a lot of effort. I will show you why I'm saying this. They are all in different time zones. Remember, we are not in the same place. So that means the time you're supposed to be eating, and every one of these individuals, especially Kema and Willis, they are all family people as well. They have kids and they have family, but they still put everything aside to come here. So let's just honor them. It is important that we honor them. Honor is a very important part of everything. All right. With that all being said, guys, let's get into today's session quickly because we have a lot of things to do today. First things first, I want to give a quick update. There is something that was being placed upon my heart by the grace of God, and I want to share it quickly. So I realized that a lot of people are not, either they understand everything I'm teaching or they don't know how to apply to their trading or their life. So one of the things that I'm going to take it upon myself to do is that every single week, when the masterclass is done, you guys will receive a newsletter that delivers to you the framework. In other words, you're going to find the framework of the masterclass, meaning that you're going to understand the key components of the things you were supposed to understand. And also you will understand the application structures, meaning that, this is what I need to apply to my trading, especially regarding the psychological aspect. Sorry. Does that make sense, guys? So it is very important that you understand that this is going to change a lot for you guys, that you are wondering, okay, Cliff, I've studied cognitive biases. How do I apply it in my life, in my trading for me to become? So this is what the framework is going to entail. Is going to come with instructions, directions that can help you to become the person that you need to become. So every single week, now you're going to ask me, Cliff, what about the ones we have done? No issues. I'm going to take a week or two to deliver all of that one by one. I will not flood the emails with it, but we're going to structure it and then send it to you guys. And then when we are done with all the 30 episodes, it will now come after every week, after every week, after every week. If you guys understand this and you are excited about this, kindly just let me know in a comment. And then we take it out from there. Does that make sense, guys? Is something they like? Okay, guys, you already know this. First of all, please do well to like this video, number one, so that it can reach many people, because we put in a lot of effort to make sure that we actually help people globally. Secondly, don't forget to invite somebody to come to this masterclass. Not for the sake of this expansion of the audience. That is a good thing. It encourages, but also for their own sake. Okay. Today we're going to be learning something very important, and I want you guys to stay with me. Okay. All right. Thank you. Also, a quick one from the team is saying that I should just let you guys know that if you're in Ghana as well, just so you know, TP Masterclass offline is coming soon. We wanted to release the anticipation flyer this week, which is today, but we just want to put some things in place. So next week, God willing, the anticipation flyer will be out. And then we will see if the dates and everything is actually agreed upon. We will also release that. If not, the dates will come the following week. But then all those in Ghana that you have been asking for. So as soon as we are done with the Ghana, then the details for Nigeria also will be up, God willing, as well. So let's see how God help us, and then we can be able to do this with you all. So if you're in Ghana, please keep it in mind that you need to start preparing, the people you're going to invite, how you are going to show up, show up in style, not in dressing, in style with the right mindset. All right. Anyways, okay, let's go on into today. I want to start today's session. I will introduce the topic as usual soon. But I want you guys to understand something, that when it comes to becoming, I'm begging you guys, be patient on yourself, okay? I understand that you wish you would have started this journey earlier. I know that you wish you would have gotten some of the information you are getting here earlier. But in life, things takes time. And you want things to take time. You see, when I say things to take time, I didn't say things must delay. Time taken in a context of process is for the benefits of that thing. It's like, I want you to, there is a saying that no matter how you want to have a baby in a month, you don't cut short the process by impregnating 9 women. No. No matter how you want a baby in a month, you need to still wait for 9 good months for a child to come out of a woman. It's called process. There is nothing you can do about it. Some of you guys listening to me right now, it was this year you started taking transformation seriously. But you want this year to give you the results 10 years of training should have given you. It doesn't work like that. It doesn't mean you're going to wait 10 years to get some certain results, but it takes time. It's like somebody having a child, and then the child is 5 months and the child is speaking like Cliff. You will either run away or you will go and give the child to whoever delivered the baby and say, doctor, this child is not mine. Because 5 months, you are not expecting the child to speak like a man. The same way, if after 2-3 years, the child is not speaking, you will also get worried that the child is not speaking. So the issue is not the speaking. The issue is the timing of the child's speaking. Whether the child spoke late or they spoke too early, you don't like that, right? So timing is part of a process to protect the person behind the process. So you need to understand that, relax, you are becoming. Really relax. Some of you guys read your first book this year. Some of you guys decided to engage in the initiative you should have started 4 years ago this year. But you want the results of a 4-year-old process. It doesn't work like that, okay? Be patient. You are becoming. I just said, let me just say this to somebody who is just putting pressure on themselves. I get it. You need the money now, but relax. It gets better, believe me. Anyways, today I want to start my lesson from an angle that I believe will help people a lot. Today we are studying something very important. I will introduce my topic very soon. But I want you guys to understand something here, that this industry is really a business. Until you understand this industry is a business, you would take a lot of things personal. Don't take it personal. Even the person that even lied to you when you started trading, don't take it personal. It's conflict of interest. They also wanted to make money. But then you can't keep on being in this industry at this stage, in this era we're living, and not understand the things I'm about to tell you. Are you with me? This industry is a business, and there are people who wants to make big money. Let's rephrase that. I didn't say people who desire big money, people who wants to make big money, and they have the buying power to make big money. They want to make big money. So I always explain. I know that when I explain certain things like the financial market has a hierarchy, there are people who keep on asking questions like, okay, even if there is a hierarchy in the financial market, what is the point? Well, there is a big point. When you choose to study a portion of the information, you are designing yourself to reach a certain stage where confidence will not flow with you. And so you need to understand all the dimensions in trading that makes a person become the person they need to become. One of the dimensions is called understanding the business. It's a form of a reality. So there are people who have decided they will not learn anything except the perfect strategy. And after 1 year, 2 years, 3 years, they are still struggling because they are not understanding that trading is a business. And so you have to treat it like a business. One of the first things that needs to settle in your subconscious, in other words, to pass through your medulla oblongata. Yeah, this is me now flexing now. I'm talking about your brain. Is that you need to understand that there is something called a business structure in this phase. So it means that every single person in the hierarchy of the market wants to make money. From the big banks to the EBS to the medium-sized banks, then the funds, which is the pension, the hedge funds, the companies, the operations, and all that, they also want to make money. You at the bottom of the hierarchy, the retail trader, you also want to make money. But then we all play, listen to this carefully now, we are all playing from different angles in this game, all of us. From the big banks all the way to the retail trading space. And even when you get to the retail trading space, your mentor and your people and the mentees and everybody is still playing from a different whole ball game altogether. And so I always emphasize on this. Don't get me wrong. For me, I don't believe, watch this. If I say this, let me put a disclaimer on this. If I speak like this, I don't speak like this to attack. I speak like this to deliver. Because to get deliverance, to reach a state of freedom, it's not money that gives freedom. It's truth that gives freedom. So that is why even if you make money in the wrong way, through lies, you have the money and you may not still be free. So there is a lot of people. I was speaking to my brother Kema the other time and we were talking about the industry, of course, because we have been in this industry for a while. So we're just gisting about the industry and we're like, it's funny how some people will never tell people how they actually really made their money in this industry, because the mentees are thinking that all their mentor did was clicking buy and sell. It's not true. You don't make money like that. Even Warren Buffett, there is a story behind his own story that once upon a time, he used to supply games to barbering saloons and things, and he made money, and then he invested. Everybody starts from somewhere. Are you guys with me? So you need to be able to understand that we live in a life that there is always two faces of each story. But if you look at it from the angle of, okay, this is all that the person did, you are creating an expectation problem for yourself that is not going to mount up to it. So I tell people this: don't quit your job to start this business, because this business is another dimension of a business. You can keep your job and still do the business. That is why when Kema was speaking, he said that, I'm not saying anybody should do this because it is up to you. But you need to understand that you can be hungry. He emphasized on that. So you need to understand this is a business. It doesn't have to be all of you, but it's a business that can become, it can give you a lot of things. So the first thing I want you to understand with the topic we're about to talk about here today is that trading is a business. And if it's a business, people want to make money. That is it. People want to make money. I want to make money. Your mentor want to make money. You want to make money. The banks want to make money. The institutions, everybody wants to make money. So it's a conflict of interest. So how I make my money and how you make your money and how everybody's making money is two different things. So you will find prop firms promising people, we're going to give you a capital to trade. Yes, definitely they do give capital for people to trade. And yes, people are making withdrawals, but there is another form of the business, which is buy the package so that we can make more, give few people the withdrawal when they need it, flag the other rest and make more money. Everybody is happy, right? It's a business. On this masterclass, you need to be matured enough. How do you become matured? By understanding this is not a playground. This is a serious business that involves serious decisions. Now, the big boys, look at this. The big boys wants to make more money. Keep that in mind. What did I say? The big boys, they wants to make more money. You see, in this industry, way back in the days, and now it's still there, but then now we know that one is dominance. We have two types of markets that you need to understand throughout the journey, the whole entire market structure till now. We have two types of market, but then now one is dominance. We used to have what we call, which was very, very intensive, is called centralized market. A centralized market was a type of market that was controlled by one entity. But now we have what we call a decentralized market. So a decentralized market means that the market that we are currently in is controlled by more than one entity, meaning one person is not in charge of everything, or one entity is not in charge of everything. So what that simply means, you can't do whatever you want. If it was only controlled by one entity, then it was going to be easier to just abuse and manipulate people any way you want. But right now, it is a decentralized market, so the manipulation is different. Are you with me? The manipulation is different. Everybody wants to make money, but there is still rules of engagement. You can't do whatever you want. For example, yes, Satan may not like you. The devil or devilish things may not like you, and devilish things may want to destroy you. But the enemy does not have the power to be able to destroy your life anytime that he wants, because there are rules of engagement. Rules of engagement. Rules of engagement. Are you with me? So because of the rules of engagement in this financial market, you can't do anything you want. If you want to do something you want, it has to be done from an angle of a smart way, so that you don't get caught. I'll give you an example. Imagine Kema and I, we are talking, and then I tell Kema, this is my topic. Maybe let's say my topic for today is called identity vacuum. So we came on the call, and then I said, Kema, no, I didn't even ask Kema. I asked in general, what is today's topic? Can you guys guess? Whoever guessed this, I will give you $100. And then Kema got that from everywhere and said, identity vacuum. Even if he is correct, it's not going to be impressive. The next question is, how did he know? They'll be like, oh, he knew because Cliff spoke to him. It's called inside trading. Because it was too obvious, right? How did he know that Cliff is going to teach identity vacuum? So what Kema will do is that, oh, okay, let me guess. Cliff is going to teach about how to become new. Cliff will teach about how to become new, how to be able to become a new person. It's like in the area of transformation. So you see, he has said my title, which is identity vacuum, in a smart way without you realizing he knew it already. So because there are rules of engagement in the financial market. So what that simply means, you can't do all that you want. So if you want to do something you want, you have to do it in a smart way. So that means Trump, as a president, he can't do everything that he wants in the market to affect it. So he does it in a smart way. Sometimes he will just make sure he connects himself to some wall and something happens. It's very smart, very cunning, right? But it is all for the influence of the financial market. All right. Warren Buffett will not just get up and put in trillions of dollars by calling all his investors partners and say, let's put this in and move the market. You can't do it like that. You will either crash the market or you will spike it. So the banks will not even allow it. That is why we have them at the top of the hierarchy, and they are responsible for monetary policies. They are responsible to making sure the rules of engagement is effective. Are you learning? Good. So you need to be able to understand that there are rules of engagement, so you can't do everything that you want. There are things you need to respect because it is a business ground. But what did I say? People want to make big money. So in order for them to be able to make big money, they have to use a strategy. That strategy, sometimes the people that get affected, everyone can, but mostly retail traders are the one that gets affected mostly. That with that strategy. So the same way you can sit down and say, my strategy is break and retest, my strategy is XYZ. The same way they also have a strategy. Because remember, they don't trade the way you trade. They don't trade from the same MT4 or MT5 or Ninja Trader or whatever. They don't trade on the same platform. They trade directly into the market. So they trade differently, but they need to respect the rules of the financial market. They want to make big money. The market is not controlled by one entity, so there are rules of engagement. Keep that in mind. So there is a strategy, and that strategy mostly comes in the form of manipulation. Are you guys with me? That strategy, it mostly comes in a form of manipulation that mostly affects the retail traders. And it doesn't just affect retail traders, it affects retail traders because there is a reason why it affects retail traders. So today we're going to be talking about something very interesting. I titled my message today, Psychology of Inducement. Psychology of Inducement. Psychology of Inducement. Psychology of Inducement. Now that you have the foundation in your mind, please write this down. psychology of inducement. Inducement is a psychological word. But now, watch this. By now, if you have been in this masterclass for a while, anytime I say psychology of something, you need to understand we're about to study the mind, the emotions, the behavior of that thing. Are you with me? It's like saying the psychology of an alcoholic. It means that we are about to study the person that is drinking, their mind and their behavior anytime they drink and when they have not drunk anything, so that we can understand their psyche. So if we say the psychology of inducement, it means we are about to understand the mindset, in other words, the emotions, the behavior, and then the mindset of that trader when they come in contact with the strategy called inducement. So it's like basically finding, let's say there are two people I will give you guys the definition very soon. Let's give the definition now so that I can give the example. I wrote down this definition. I prepared it myself for you guys. It's long, but write it all. Okay? I will keep on going back and forth, but write it all. It's very important you understand this definition. I prepared this for you guys. I said inducement is a deliberate move. Please write it down. We'll talk about, I will break everything down for you, don't worry. Inducement is a deliberate move by large market participants. We are talking about inducement in trading, so don't worry. I want to give you the trading definition, and after that, I will give you analogies and example for you to understand very well. So, again, what is the title? Psychology of inducement. What does that mean? It means that we are studying the mindsets, the behavior, and then the emotions of the trader, all right, whenever they come in contact with this kind of strategy called inducement. When I say strategy, not the one to make money with, I will explain. Just write something down. Inducement is a deliberate move by large market participants. Inducement, please write it down. It's important you write it down. All the emphasis of my teaching is with this definition. If you don't get it, you will miss it. So take your book, take your pen and write. Don't come here and spend 1 hour watching me just listening. You will not learn anything. It's better you watch Netflix. So inducement is a deliberate move by large market participants. What is the large market participants? Example, the banks, the funds. When I say funds, you should know this by now. I'm talking about hedge funds, pension funds, and all of those stuff. So the banks, the funds, and the market makers, they are the large market participants. Remember when I listed in the other hierarchy? So now you understand why. So imagine somebody telling me, Cliff, why do I need to understand all these things? Well, if that person that is saying that it's possible he's learning smart money concept, but he just wants to understand the concept without understanding the business. It doesn't work like that. Inducement is a deliberate move by large market participants, which is the banks, the funds, or the market makers. That move is designed, I wrote down here, is designed to derail the prevailing bias of other traders. Is designed to derail temporarily, all right? Temporal, it's not permanent, but to derail the prevailing. Prevailing means your original bias, is to derail you from your prevailing bias of other traders. I'm going to take it again. Inducement is a deliberate move by large market participants. Now you know them already by the hierarchy I explained. The purpose of this is designed to derail you, the trader, from your prevailing bias. Now, the goal of inducement in trading isn't random manipulation. Please underline the word random. The goal isn't random manipulation. Underline the word random. Now, watch this. I will give you another point, but I want you to listen. You can pause here before you write. The reason why inducement is necessary for the big boys is because they want to make big money. But then the big boys, they cannot be able to just put any money they want in the market. if you put a lot of money in the market, it will either create a sudden crash or a sudden spike. So what they do is that they want to basically create liquidity so that they can move to the direction they intended initially. But in order for them to be able to do that, it has to look smooth. Watch this. It's like a group of people that they are trying to eat cookies. If I get that, would it look good? Yeah? Is it okay? So imagine a group of people. Imagine somebody who is very tall. All right? Imagine somebody who is very tall. And this individual is, they are trying to find where the cookie jar is. Cookies, all right? So the tall person I've seen at the cookie is at the top of the building. But the people standing near him, they are all short. Now, he doesn't want to share the cookie with them. So he tells them, I think the cookie is in John's room, though. The minute they goes to John's room, he picks up the cookie and then he takes the cookie. So now the cookie was not in John's room, and it looks like as if the cookie was never here either, but then the tall guy already knows that he have taken the cookie. So the goal is not to necessarily attack you. The goal is their benefit. Are you with me? So inducement is basically when the big boys, they want to move large sum amount of money, but they cannot do that because of rules of engagement. You are not allowed to do that, because when you do that, you will create a crash or a spike or whatever one not. So they need to move the money in a way that feels smooth. So it comes in a form of, okay, hey, we are going to sell. So the moment we all go in and we are selling, before you can realize the market goes to the original direction. You have been derailed to become the liquidity so that we can use that to go up. Now, Cliff, why? Why do they need that for it to happen? Because in the market, it's always going to be buyers and sellers. So there must be enough sellers in the market to be able to create buyers. Are you guys with me? Are you learning? So when this becomes the case, they cannot be able to just move the market the way they want because there are rules of engagement. There are monetary policies. You cannot, it's like saying, if the bank, if they know there is no money in Ghana, just print money. You don't just print money. There are rules of engagement. So they don't, even though they have money, you don't just put all the money in there. Even if you put it in there, it will be broken down into several positions for them to be going to that direction. Are you guys with me? Good. So inducement in trading is when the big boys, you can call them that, they make a deliberate move just to derail you from the original plan so that you will become the liquidity. Now, it is not just you. Watch this. Even banks collapses. So sometimes retail traders have this notion that they are the only ones struggling. Chief, you're not the only one struggling. Majority of institutions that are also not, structured, they suffer as well. I remember a few years ago, there were banks in Silicon Valley that were crashing down and so on and so forth. So you need to understand that even some of the banks, they are struggling. Some of the banks, they lose money. So it doesn't matter whether you have been there or not, because there are rules of engagement. Even though that you understand the business, there are still certain moves that you won't see it coming. It's as simple as that. And those moves are made by people who have the buying power. So you need to be able to understand that there are certain things that is going to derail you from this market. Don't take it personal. It's business. There are certain news channels that are in the financial market that sometimes releases not fake news per se, but they twist the news to create panic, to create sudden sales and sudden buys. All of this is to create a certain kind of structure so that you don't see it coming. Are you with me? So again, let's continue our writing. I wanted to write on the board. I will come there later. But watch this. I wrote down here that the purpose of this is to create the ideal conditions for them to move large sums of money without, I'm going to give you the cautions. Okay, so write this down. The purpose of this is to create the ideal conditions for them to move large sum amount of money without, then you put this, okay? Is to create the ideal conditions to move large sum amount of money without what? Number one, without causing a disruptive, obvious spike or crash. I already told you that, but write it down. without what? Without causing a disruptive, obvious spike or crash. Number two, without revealing their true discretion too early. All right. The number three, slipping into a worse price because there aren't enough opposite orders available. So when there are not enough opposite orders available, you know, they don't want to slip into a worse price. They don't want to go all the way there with their own money. It wouldn't make sense because they want to make more money. So in other words, they have to make sure they grab other people's money, OPMs, to be able to go to the direction. All right. So in simple terms, I want you to write this down. They mislead. Okay. They gather liquidity. Okay. They position themselves. Then they take the market where they intended all along. They mislead, they gather liquidity, then they position themselves, then they take the market where they intended all along. I'm going to go into this deeper, but I want you to understand something. It's very important you understand the information we're talking about here. Psychology of inducement. Watch this. We are talking about psychology of what? Inducement. The purpose of this lesson today is for you to understand one thing, that we are in a business ground. This is not a child's play. Whether you just graduated from high school, it's still business. Whether you got divorced or unfortunately you lost your loved one, trading is still business. Whether you don't have money and your bills is due next week, it's still business. And so your life situation and the problems you are facing in life does not change the structure of the business for anybody. Remember, these guys don't know you. So the purpose of today's lesson is for me to introduce to you that this is perfectly normal. This is not the first time that you should be hearing this word. Okay? Inducement is derailing. You are not the first human being to be derailed from the original purpose. Go ask Adam and Eve. Satan derailed them. He induced them. So if you are thinking inducement is for traders, you are joking. Satan derailed them from the original plan, even though God told them to not do the things they did. So inducement is when some individual, it's like a guy, two guys, and then they all like the same, female. And the other one is afraid the other guy would take the girl. So he can basically say things like, I don't even like this girl. I don't even like the way she dresses. He's lying. He's lying. He really likes it. How did you know you don't like it? So he's lying. So 1 year, 2 years later, you will find out that this gentleman is now marrying this individual. What changed? Because that person's mind was always going to marry this woman. It's just that he just wanted to derail the person from the original game plan. And then that is it. So inducement is not just in trading. It's anything that happens to an individual to take you away, your mind and your focus from the original course, and then the original course still stands. There is a psychology component part to it. What does it mean? It means that before inducement will be able to happen. So let me put inducement here. So it means before inducement will happen, it needs two things for it to be able to work. The first one is called emotional hook. Emotional hooks. And we have cognitive bias hooks. No, they can't see it. Isn't that clear? Can you guys see my screen? The board, sorry. Can you guys see the board? So why are we studying inducement today? I'm not teaching you inducement, technically speaking, because inducement, you can only spot it after it has happened. If you want to spot it before it happens, it is still going to be an assumption because you will still never know. But there is a possibility you can see it over and over again if you understand what I'm about to teach you. Does that make sense? So inducement, it needs two form of tools to be effective. So the big boys, they are not only just inducing you because they have the buying power. They are inducing you because they are finding emotional hooks and they are finding your cognitive biases. Keep that in mind. Okay, let's write some certain things down. I wrote down here that why does psychology matters here when it comes to understanding this strategy. The I wrote down something very powerful. Today, I want you guys to write down a lot. You are going to need these notes. I wrote down here. I said the big players, they just don't hunt liquidity. They exploit behaviors that create that liquidity. Did you get what I said? The big boys or the big players, they don't just hunt liquidity. They exploit the behaviors that create that liquidity. So it's a behavior. Every single thing you see in the market is emotionally dependent. When the market is going up to a point where it's not supposed to or whatever, it means somebody in the market somewhere is getting greedy. If the market is crashing, there is fear involved. So the market is basically an emotional ground full of business people. All right. So I always say something that the big boys, they also get emotional. Don't get it wrong. The big boys also get emotional. The only difference between you and them is that when you get emotional, it affects your pocket. When they get emotional, it affects the market. When their emotions affect their pocket, well, it's game over. But when you get emotional, let's focus on you. When you get emotional, it affects your pocket. So you need to understand that your behavior is what leads to you becoming the liquidity. So now that you have heard the word, the moment you heard the word behavior, then it is worth exploring psychology, right? Because what is psychology? Psychology is the study of the human mind, his emotions, and the behavior. So the moment we saw behavior, automatically we know that we're about to study a psychological aspect of this conversation. So there is an emotional hook and then some cognitive biases hooks that helps you for you to be able to know that, okay, so if I understand this, you want, listen. Something just dropped in my mind. The purpose of this is not for you to go and not be induced again. No. Today, I'm not giving you keys to not get induced. I'm going to give you keys to survive in this game. You cannot eliminate inducements, but you can survive when you have the right information. Are you guys with me? Okay. All right. So the emotional hooks that I use in inducement, I want you to write it down. The first one is FOMO, fear of missing out. In order for the big guys to be able to get to induce you, there should be a connection with your emotions that comes to you, and it's called FOMO. You have heard it, just write it down. Don't think you know it. Write it down. Now, FOMO. Before I even talk about a FOMO, before I want to talk about the FOMO, let me give you first. Let me give you first the examples of inducement in the market. Some of you guys have heard it before. I'm not going to give you a lot. So just don't worry your head. I'm going to give you a few examples so that you understand this perfectly well. Before we come to the psychological hooks, emotions, and cognitive biases, I want us to write down examples of inducements. Okay. You guys should give me some examples. I want to test the knowledge of each and every single person, because I know a lot of people in this community study small money concepts and ICT most of the times. I think so. I think small money is the highest. Let me know in the comment section what they're putting in there. Give me some examples of inducement, you know. Let me have some examples of inducement, you know. When you tell me the answer, don't worry. Here, when you get it wrong, nobody's laughing at you. It's a family of people who are learning to grow. So give me some examples of inducement. What do you know? If you guys don't know, just drop some number ones in the chat. I'll give you the answers. But tell me. Thank you very much. Who did? Who said that? Stop hands. Okay. What else? Who said that? Okay. Sell side liquidity. Okay. Fake out. I like that. I want that to be my number one. Fake out. Okay, what does he say? Thank you. Breakouts, which is also connected to the fake out as well. Good, good, good. Okay. Perfect. I like that. I like that. He's trying to just basically just also say a fake out as well, but it's a good understanding because it shows you guys understand what you're saying. I like that. I like that. So basically manipulating the highs and the lows of when the market is consolidating. I like that. Yeah, liquidity sweep is the overall. So liquidity sweep, I will not put it as number 5. Liquidity sweep is the overall purpose of the examples. Are you guys with me? So you need to be able to, it's okay. You guys need to be able to understand that the purpose of the stop hands and then the fake out and the breakout, the purpose of that is to be able to grab liquidity. So liquidity is not necessarily the inducement. Liquidity is the product of inducement. Thank you very much. Who said that? That's good. High impacts is an example of inducement. I love that. I love that. Let's drop the some number ones in the chat for Emmanuel. Very, very, very good point. Fake news impact is part of inducement. It's part of it. So you guys understand this now, yeah? So stop hands, fake out, break out, they are all, we can put them onto the fake out zone and all of that. And sometimes also when the market is consolidating, in fact, it was happening a lot, I think this week, in the session right now. I think it was happening a lot. I think, is Kema here with me? If Kema is still here in the room with me, can you guys bring it up on the screen for me, please? Kema, are you here? Or you have just going to drop something now? When you guys find Kema, bring it up on the screen. I want us to discuss something to help you guys a little bit. So you need to be able to understand that this whole of this week, would you guys agree? The whole of this week, what happened was gold. Gold was plain. Sometimes when I see the way the market is moving, I know that some people would definitely fall for it. And it doesn't matter. Even for me, sometimes if you are less careful, you will think, especially, when you are happy all the time, before you can realize, you will notice that you are behaving funny. So Kema said something, I like it. He said that sometimes you can make money from Monday, Tuesday, Wednesday, Thursday, Friday, and before you can realize, then Kema, are you here? Can you unmute yourself?
Yeah, I'm right here, bro.
How you doing, bro? You good?
I'm doing good.
Did you see me calling you? You surprised? Yeah. Yeah. Okay. So, Chief, look. This week, I want people to understand something that we're discussing already, and I want it to be very quiet, very simple. We said that during the time of God, we were talking about that this thing is faking people out. So it's like it pretend it wants to break that zone, and it doesn't, and it keeps on coming down. And you see the last drop before the push up. I knew some people, and I hope they are not on this masterclass. Some people didn't close the trade. They thought it was going to go down.
Definitely.
And so what do you want to say about your review about gold, what happened last week in terms of that level of structure? What do you think?
So, one of the interesting things that, happened in this week is, a lot of time when we are coming into the week, we take a look at the fundamental data that comes along in the market, because some of the moves, are not technical. They must have come as a result of news. So we make ourselves well abreast about news data out there. But you realize that in this particular past week, there was not so much news, data on Forex Factory. In fact, the days that actually had the news components, Friday was not a part of them. Friday was a free day, and we actually thought it was basically going to be market just unraveling gradually. And so that move coming in on the market was unexplainable until later on when we found something. When that happens, a lot of traders try as much as possible to look for something specific to tie into. And so later on, we found out that, it was something that had to do with the U.S. government with respect to the gold market.
Yeah.
Right. Yes.
Yeah.
And
I hope you guys understand what Kema is saying now. Guys, look, at the end of the day, I wanted to bring you up on the screen because we're talking about this and we're laughing. And it is very important that you guys understand this, because in this industry, there is nothing new under the market. I want to say under the sun, but this is under the lights. There is nothing new under the lights. You see, gold does that all the time. But people
Yeah.
still fall for it. Why? People still fall for the lies of the market and the inducement because naturally, as a human being, your emotions are always hooked to what you want to believe. And he said that.
Yeah.
If somebody is able to get that correct, it's a cognitive bias. He said it right there. And the name of that cognitive bias is called confirmation bias.
Yeah.
It's when you start to now look for every single thing you can find around you to connect it to something for something to make sense.
Yeah.
All right, guys. I don't want to keep Kevin. I'm sure he was following somebody. Anyway, bro, thank you so much for coming.
All right.
All right.
Thank you so much.
All right, guys. So you need to be able to understand that the purpose of this stop hunt and the fake out, whether news spike, connection is all to get liquidity. Are you guys with me? So when the big boys now find enough liquidity, they go to where they wanted to go to all along. Very important that you understand this. So remember, what are we studying? We are studying the psychology of inducement. Now, we are about to talk about your mind. Buckle up. We are about to talk about your mind. Okay? So the first emotion that is on my lists is fear. You see, this is all cap. You see, I'm inducing you guys. I made a mistake spelling the fear. Instead of me to be humble, to finish it well, I'm just trying to stylishly make something. It's a lie. Let me spell it well. Fear. Anyways, so fear is the first emotion. Fear of what? Fear of missing out. I have two types of fears. I want to put it here. So number one is my fear. No, not my fear. It's the fear of missing out. Is the fear of missing out. Okay? I will talk about the number two later. Let's talk about this. You see, fear of missing out, normally we will connect this type of inducement. Again, TP family, today we are teaching together, okay? Let's do this. Let's rock and roll. So which type of inducement would you connect fear of missing out to? Give it to me in a comment if somebody gets it right. What type of inducement, based on the examples we gave earlier, what type of inducement would you connect fear of missing out to? Did somebody give me the answer? Nobody yet? Come on now. I believe in you guys. What type of inducement would you connect fear of missing out to? Perfect. Okay. Okay, fake out. So fake out is great, but then the reason why you will get triggered of missing out is not necessarily fake out, because fake out is the inducement, but then what causes the fear of missing out is not really, is spike. So it's like when the market is moving this way, yada, 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 and then it has been consolidating for a while and you see a spike all of a sudden. It's like, okay, baby, we're about to go for the home run. And then it enters back into the space. So the spike makes you feel like you are going to miss out. And so you get in when the market was just basically about to fake out. So what causes the name of the inducement is fake out. What causes the emotional hook together is spike. All right, guys? So the name of the emotion is called fake out. Sorry, the name of the inducement is called fake out. What triggers the emotion is the spiking of the candlestick. So normally we call it imbalance, coming out of an accumulation phase. It's true. It's true. Before the markup phase, definitely there is an accumulation phase that needs to break. However, if it is not ready yet and then it spikes and it comes back, the spike is what makes you feel like you are missing out. So if you understand this foundation, drop some number ones in the chat. Are you guys with me? Fear of missing out is the FOMO is the hook in emotions that the big boys need. So what are we talking about? That in order for you to be induced, there is a mind or a behavior or certain emotions you need to have to make inducement possible. Psychology. Do you know why? Because the human being, your brain is very important. There is 4 components I will borrow from my knowledge and teach you guys something. There is something here, you already know this, it's called the frontal lobe, the prefrontal cortex of your brain. Your prefrontal cortex is what is responsible for logic, reasoning. For you to be able to see the future, it comes from your prefrontal cortex, okay? It is a frontal lobe of your brain. It is when this part of your brain shut down, if you're not careful, you will get depressed. Because if you can't see your future, you are in trouble. And you see, normally people who, or a life that leads to depression is mostly when you decide to go ahead in the future without taking it slow in the present. Watch this. So the frontal lobe, or in other words, the prefrontal cortex, which is responsible for your thinking, being logical, is number one. It is important. It helps you in trading. Why? Because in trading, you have to be logical. Remember, you are a decision maker. Perception, emotions, logic, the will. So the prefrontal cortex is responsible for being logical. Then we have another thing called, after your prefrontal cortex, you have heard me say it before, we have your amygdala. The amygdala is responsible for things like fear, emotions. As I told you, if you're watching a movie and somebody sees a lion and the lion is coming to, I was going to say chew. The lion don't chew, they devour. The lion is coming to kill the person. In the movie, you'll be like, run, run, run. You know, both you and the person you are telling to run, you guys are all normal because you know it's a movie, right? Anyways, so you are telling the person to run, but the person doesn't run because fight or flight comes from the area of the amygdala. Are you guys with me? So the reason why the person is not running, there is a reason to that. When you get shocked and your brain shut down, yes, you know you're about to die, but there is no signals coming from your brain to release it through the fibers to your leg for you to run. So you freeze. So the person doesn't know, oh my God, should I run? Should I move? Should I stay? The person is frozen. So the amygdala is what is responsible for risk assessment. Because it is the amygdala has one job, to protect you. So if you see a lion, I want you to imagine your brain like this. This guy here is called the prefrontal cortex. I'm going to go to prefrontal cortex, PFC, right? Good. Then we have the amygdala, A, okay? So these guys don't work separately. This guy, he's the annoying short kid. Lion, run, run. That is this guy. He is always complaining. He's always talking. He's always sad. He's always angry. He's always just doing whatever. This guy doesn't talk much. But this guy is the one responsible for making decisions. So they are friends. And we have what we call your dopamine rewarding system of your brain. This guy. Then we have the fourth one I'm going to borrow. We call that the basal ganglia. Basal ganglia. Okay? This is the part of your brain responsible for habit formation. So these are the four. They are all friends. They all work together, but they're a group of friends. This guy is the annoying one. This guy is the excited one. This guy is the one that is like the uncle. You know those uncles that they always advise everybody in the house, but they don't do anything in life? Yeah, that is this guy. Then this guy is the quiet one, senior man, right? Gentleman. I think I'll call this guy Kema. Anyways, so Kema is the prefrontal cortex. All right, anyway, so these are the four friends. Are you with me? Stay with me. I'm teaching you something. You need to understand something now. This is neuroscience in with these four people, they all trade with you. This guy, when the amygdala is nervous and scared, it shut down this because this one is the loudest. This guy is the one that he always wants to have fun. Let's go to the party. Let's go to the party. Let's go and watch the porn. Let's go and do this. Ah, man, I'm bored. Can we just go watch porn? This guy. He's the guy. Then this guy is like, yeah, man, if you want to watch porn, I'm good. Now, this is the guy. Basal ganglia, I'm good. If you want to watch porn, I'm good. If you want to trade, I'm good. You know me, I just do what you want. This guy. This guy is like, porn is not good. You remember last time? Oh man, let's go watch. Let's go watch. So these guys, they all work together and they are all in your trading. So when you want to be logical, you need to make sure this guy is shutting up. And you need to make sure this guy is under control. And you need to make sure this guy is best friends with this guy so that this guy is helping this guy to have the right attitude. One day I will take on this topic. I will title it The Neuroscience in Trading so that you really understand how your brain operates every single time you're making decisions. Does that make sense? So now that you understand this, I want you to understand that every single time that you are feeling the way you are feeling, it is not abnormal. It's perfectly normal for you to feel the things you feel. Why? Because these guys, they know. So inducement is not something new to traders. You were trained long before you came into the market. That is why when you go to IKEA is one of the most beautiful places to buy furniture. But IKEA is structured in a way that as soon as you enter into the IKEA shop, to the time that you will come out, everything is designed to get you to buy something. Powerful psychological selling points. Same thing when you enter a grocery store. When you enter a grocery store, you will see that the toffees, the candies, they are below the floor. So what happens is that the child will see the toffee and be like, mommy, I want the toffee. Now, whether the mother you have money or not, the child is screaming. So, I mean, it doesn't work on African parents, right? Just knock you, eh? So African parents, you cannot, blackmail them like that. Man, sometimes it works, but most time, even if it works in the shop, it will unwork in the house. So next time when you go to the shop, inducement has already been tackled. Are you with me? So fear of missing out. I'm staying here because it's a very big problem. The fear is the first emotion that people use. So missing out. The second type of fear is fear of loss. Fear of loss. What if I lose the money? Yes, you can, chief. You can lose the money. And so what? But then you see, if $100 is all that you have and you want to make more money, you're going to risk more. You risk more. If the market is pulling back, you are in trouble. So fear of loss. What is the name of the inducement? Come on now. Give me. What is the name of the inducement that is connected to fear of loss? Somebody give me the right answer. What is the name of the inducement that is connected to fear of loss? No. Yes, part of it. Pullback is part of it. But give me the right name. No, it can be a buy. Come on now, TP family. Boom, who said it? Stop hunt. Let's go. So fear of loss is connected to stop hunt. Because now, watch this. I don't want to go ahead of myself, but watch this. The market, first of all, they got you with a spike. So it's a fake out. So let's say the market is coming from this direction. Okay, it's moving this way. Then finally it broke here with this. You said, oh, we are going for the home run. It faked you out. Your stop loss is below here, below this area here, right? So instead of you knowing that, man, I'm wrong. In trading, the person that is able to say I'm wrong quickly is the one that makes the money. I'm wrong. Cut it. Don't even think twice. Cut it. But you see, that is where those four guys that I explained to you, the dopamine guy and then the amygdala guy, you need to shut them down immediately. And how do you do that? You don't beat a thought by thinking. If you think with these guys, you will fail. So the minute that you feel like you are invalid, you tell yourself, I am wrong. And losses is part of the game. I walk at it, talk. That is how you activate your prefrontal cortex. You activate your prefrontal cortex by talking. But then you also make the amygdala and the dopamine system stronger by thinking. So the more you spend time thinking, the more that you are meditating on either fear or desires that is unexpected. So now that it has broken this and it faked you out, instead of you getting out of this trade, oh man, let's see how it goes. Then it's coming. Oh man, what if it hits my stop loss? Yes, that is what they are coming to do. They want to come and hit it and go to the direction. But what you are going to do is you are going to remove your stop loss. Remember what I said? That they need your emotional hooks and your cognitive biases. So the cognitive bias they are going to hook with it is called loss aversion. What is loss aversion? It is a tendency of when you don't want to lose become greater than your desire to gain. So instead of you cutting the loss to look for a trade again, you are going to hope that it will not go there, but it will go there. So you remove your stop loss. Now, the minute you remove your stop loss, now your prefrontal cortex gets shut down, and the two guys that you don't want them to be in operation is in control, which is the amygdala and your dopamine reward system. You are in big trouble now. Because now you can't be logical anymore. So how do you combat this, Cliff? The minute you find any sense that this is invalid, cut the trade. Put it down. Cut the trade. I want you to repeat that for me. Rhythm is powerful. Cut the trade. If you find out it's not going there, what do? You cut the trade. Wherever you are, get up right now. That if I find out from Monday to Friday coming that the market has faked me out and I am wrong, I will make sure I kill all pride and do what? Cut the trade. Repeat it. Cut the trade. Don't think twice. Cut the trade. Because if you don't cut the trade, the same energy it takes to hold on to trade is the same energy it takes to cut the trade and look for another entry. Are you guys with me? Very important you understand this. So these are the two first emotions, very important. Fear of missing out and fear of loss. If the market finds these two emotions within you, they will either fake you out or they will stop you out. But what is the purpose? Is to go back to the original direction. So if you are wrong the first few minutes or whatever, and you cut the trade, you have escaped this. Then you will wait for it to come back to the original direction. Then you look for an entry, whether on a smaller time frame or not. Thank God there are multiple time frames. Thank God for that. That means even if you are missing another time frame, you can schedule another one again and go to another direction. Fear of loss and stop hand. These are the first emotion. Okay? Number one. Is the internet working perfectly? Okay. Now, the last one I want to give you is, I want to give you herd mentality. I'm going to just only give you two for today. Herd mentality. Now, there is a difference between fear of missing out and then herd mentality. Even though herd mentality is the habits of people following the crowd, they don't follow the crowd because of fear, even though you can find fear of missing out in a herd mentality. Mostly herd mentality is when people just want to follow the crowd. It's a habit. They feel like if I follow the crowd, I'll be less wrong. So if you are somebody who loves to follow the crowd, then you will mostly be induced by the market. How? Well, if everybody is buying gold, then you might as well just buy gold. And so what is the number one? What is the factory for herd behavior? Hopefully somebody gets it correct. There is a name given to this factory. It's a factory. When I say factory, where herd mentality is produced in this industry. What is the name of that company? What is the name? Tell me. Powerful company. Very famous company. What is the name? Now I'll tell you. The name of the factory that produces herd mentality in this industry is called Telegram channels. Telegram channels. Buy now, sell now. Yes, buy now, sell now, shoot now, right? Herd mentality. Telegram channel is the number one corporation of that. Not Telegram as the company. I'm talking about Telegram channel. Only legends will understand this. Buy now, sell now, go now, stop now, and woo, the goats. Yeah, right. Yeah, Twitter today says sell now and buy now. Yeah. So herd mentality. One of the things that helps people a lot, majority of some of my client, when they come to me and I ask them, are you in any groups? They say, yeah. I say, mute it all. Mute it all. And unless it's a group you have found the right environment. If not, mute it all. If not, it will create a herd mentality. You cannot be able to even think for yourself anymore. Why? Buy now, sell now, coordinates coming soon. What are you selling, Chief? Warren Buffett, what are you selling? Anyway, so these two emotions is what I want us to keep it in mind. Okay. So number one, these two are very important. We have fear of missing out. We have fear of loss. They all connected to fear. Then we have herd mentality. Let me sit down a little bit. Herd mentality. Okay. Herd mentality. What is that? It's when you are basically just following the crowd. Now, I want what somebody say something? Yeah, free trade. I like that. Free trade. You see, you guys are now realizing the reality of this game. I want to show you guys something. We want to talk about something right now. I want to talk about the mind sequence game. Okay, so now that you understand this, it's very important. I want you to also, I want to quickly list for you the type of biases it uses. Then I will go to the sequence game. So this psychology of inducement, it uses emotions. Number one, I listed for you guys right now 2 of them. And then it also uses cognitive biases. What is cognitive biases? It is just the brain shortcut to make decisions, because the brain doesn't like to think something new all the time. So it creates a structure of, how do we call it again? A habit already developed so that you can be able to do the same thing over and over again. So I've talked about this. The video is already in the playlist. You can go and watch it and understand cognitive biases. But watch this. There are 4 types of cognitive biases, in my own opinion, plus my experience, that always fall for inducement. So these 2, they work together. Don't get it wrong. So number 1 is recency bias. Recency bias. Write it down. Number 2, go watch the masterclass. You will understand all of this. Number 2 is what we call the confirmation bias. Confirmation bias. Number 3 is, I will put overconfidence bias here as well. You know that you are wrong. Overconfidence bias. You know that you are wrong, but you still want to stay in a trade. You still want to believe in your entry. You are wrong, chief. Cut it for now. And the last one is loss aversion. These are the 4 cognitive biases that connect to the emotions to get traders to be induced. 1, recency bias. Number 2, confirmation bias. Number 3, overconfidence bias. Number 4, loss aversion. If you don't understand this, kindly please go back and watch the cognitive biases on the YouTube live playlists. You will understand cognitive biases more. I broke it down very well, okay? All right. Now that we understand this, before I give you guys the system to use to survive inducement, let's talk about the sequence of how the game works. So over here, I'm going to give you the list. Here is going to be a practical illustration. Capish? Okay. Number 1 is what we call hope. So let's say, for example, this is your supply zone and this is your demand zone. You want to be able to, in between here we can find maybe discount from here, and then equilibrium, and then premium. So let's just say this is it. So you want to buy from here, and then you want to go to the upside. Okay. So one thing that you need to understand is that the market is going to obviously come from somewhere, and then it will create a markup, right? And create a markup. So you know that from a smaller time frame all the way to probably 4 hours or 1 hour, it has probably already changed a character. That's why it's heading towards to the upside. So a change of character has already happened. You are now waiting for it to pull back, whatever one, not anyway, so on and so forth. So you could tell that it's going to be making things in here. So from here, you couldn't probably catch it. So you're trying to look for something from here. So let's use here for the direction. So now this is you said if it breaks this, you will buy. So it broke this, and then you are waiting for this, and then you obviously missed it. So you entered from here as your entry. Now you are entering from here because of hope. And then you entered by committing. So the first thing is hope. The second sequence, this is a sequence game. So the first thing they need is to make sure that they make you feel like this is happening. So it will break it. So you were hoping this will be your entry, and it did. And then you see, when you enter into the market on a fake out, every fake out doesn't look like a fake out. That is why it's called fake out. So when you entered, it gave you some blues. How many of you guys have entered into the market before? You saw blues, very super excited. And then before you could realize, all of a sudden you were in red. That pain is a mixture of anger and disappointment. It leads to rage. Rage leads to revenge trading. You have heard me talking about this. Again, check our video, Emotions in Trading, part 1 and part 2. It will help you. It's called Emotional Intelligence. You will get to understand as a human being, you cannot eliminate emotions from your trading. You can't. You are supposed to be emotional. You are a human being, as I always say. So as a human being, you are going to be emotional whether you like it or not. You just need to understand how to become emotionally intelligent. So you are going to basically find yourself doing what? Entering, and it's going to go into some small profit. And when the profit happens, you are excited. So the hope led to the entry. You are committed because it gave you small profit. What happens next? The next thing is shock. Not electricity. This is straight from the market. Shock. Woo! Shock. Now, from hope, you committed by triggering. Then you are shocked because you didn't see it coming. This is, people sometimes think that, when you are teaching like this, oh, then I will go and look for smart money concept strategy so that this will not happen to me. I was telling people something this, and I said, look, you can look for all the strategies you want in the world. If millions of people learn that strategy will somehow start depleting in consistency. Do you know why? Because the market still needs liquidity to move. So imagine 1 million people said they are learning a strategy from Cliff Cheqona titled Cycle Flow Analysis. And Cliff said, Cycle Flow Analysis is the best strategy in the world. Okay, Chief. Cliff started teaching 1 million people. Now, all the 1 million people who have learned Cycle Flow, who is now good traders, now they are all waiting here to enter, because apparently Cliff is saying that when you enter from here after liquidity sweep, you can get the best entry and not lose. Okay, Chief. So now that you have 1 million people all learning the right things, who should enter then to become the liquidity? We are all waiting, right? So we are waiting. We are waiting, right? Because we have all learned well. Think about it. We are all now smart money traders. So we are all learning well. So what is happening now is that who is gonna enter? Only those probably who will fall for it. But think about it. So mostly strategies that works, only minority knows. That is what we call something an edge. Edge is personal. It's you. What gives you an edge over the market? As Kema will always say. So you need to understand that now the market is dropping on you. You are shocked. Now remember, this hasn't changed. Watch this. This direction hasn't changed. The market is coming from a demand zone. It's going all the way here because nothing has changed the market. Even if this is news, fake out, whatever, nothing has changed. It's still going here. So the moment that you are shocked, now you are going to be in denial, thinking, oh my God, it will not drop on me. Then you now get from denial, then you now go into panic mode. Then the panic mode, after you finish panicking, you now cut it or hold it, whichever way. Then after you are being done, whether blowing your account or whatever, you will start to see this. That is why it is very important that as a trader, if you don't have a lot of money, use proper risk management. All of these things I'm talking about, one of the things that saves people from these issues of life is your heart. Yeah. The Bible says that out of the heart of man flows the issues of life. So if your heart was not desiring trying to buy the Lamborghini today, you would have used a proper risk management. And even if you have $100 account and you're having a drawdown of $10, you will not panic as much. But now you were in a drawdown of $50. So now you are scared. So you closed it, it went there, you are angry, and then you entered here again and you forget that it will pull back small. And you told yourself it will blow, let it blow. And it blew. And after it blew, it now went to the demand zone. And then now you went and bought another course. And someone said, the market will always go from here to here. You're like, Chief, I know, but I have not been able to catch it to here. It's because now inducement is happening to you all the time. Hope, commitment, shock, denial, panic, you cut it or hold it. The mind game sequence. Hope, commitment, shock, denial, panic, cut it, hold it. You guys are with me? So, Chief, what are you saying, Cliff? What I'm saying is you cannot do away without this. Why? Because whether you like it or not, every strategy works for those who use it well. The only issue is the big boys wants to make money. That's when I said, I told you, they want to make money, whether you like it or not. It's a business. They don't want to make $100. $100 is for you. They want to make a lot of money. In order for them to make the money, they have to respect the game. So in order for them to respect the game, they need to come with their strategy. One of them is called inducement. It is a way they make more money without breaking rules in the game. So this is forever going to remain. So Cliff, can I eliminate this? No, Chief. But you can survive through this. So the next thing is I'm going to give you a couple of few things you need to know. This one we'll run through it sharp, and then we are done, okay? Write this down. I call this the survivor guide, how to use this information that you're hearing now. The first thing I want this information today to do for you is to shift your perspective. You need to stop seeing the market as a playground. The first perception I want you to have, that trading is a business and everybody wants to make money, including your mentor. Okay? Including him. So that is why, sometimes he finds it difficult to tell you don't overtrade, because if you stop overtrading, then rebate money won't come. Yeah. So if he tells you, take one trade a week, where would he make the rebate money? So every single landing session, he tells you, even if a snake is moving the market, he will buy. Right? But it's not true. Now you understand you are a performer. So you don't need to trade every day. Some days you're supposed to take a chill pill and be like, you know what? Let me relax. But it's impossible, because if you relax, another person will not make money in this business. Right? So it is not only inducement, it's not only just coming from the top. Even at the bottom, there is inducement. The best prop firm in the game. Yeah, right. The best broker in the game. Yeah, right. Right? So think about it. Your perception must shift. Become smarter. The best profit in the game. Okay, yeah, cool. All right, cool. I mean, I will check them out. Can you send me some information? Talk like a businessman. Don't just jump into everything that goes. I always tell people this, that if somebody invites you to this masterclass, don't just come and be like, oh, okay, they said Cliff Cheqona teaches well. So no. Come and listen. Don't be proud. Listen. If every information I'm teaching you is a lie, you don't have to come back again. It's fine. And then when you now go, finding that I'm lying, pray for those who are still here. Right? But if you come and you find out that this place is transforming you, stay. Do pray for me to keep on doing this and stay, because I promise you, in this industry it's hard to find Kema. Believe me, I've met many people, and that is why he is here on this stream with me. One of the most honest people I've ever seen in this industry is that brother of mine. So you need to understand this, that is in this industry, you need a perception shift, and it starts from the truth. Do the research. Even the things I'm teaching you, go check if there is something truly called prefrontal cortex. If it doesn't exist, quickly tell people, Cliff is capping. But if it exists, stay. Don't just hold on to it. Even as a Christian, when you learn from the church, you still need to go and do your research, read your Bible, stay with the truth. It's very important. So perspective shift is the first thing. You need to accept this as a business. What am I giving you? Survival guide. Survival guide. So the first survival guide is like a parachute. It's called the truth. Accept this business as it is. Everybody wants to make money. So think like a businessman. Talk like a businessman. Research like a businessman. Learn like a businessman. Oh my God, he bought a Lamborghini. And so what? Is it yours? What has that got to do with your life? Shift your perception. Don't be overly too impressed in this industry just like that. There are many things you don't know. That is number one. Shift your perspective. Number two, always identify liquidity zones before trading. Cliff, how do I identify liquidity zones? Well, very simple. The highs and the lows of every area in the market, people are buying and selling and putting their stop losses there. So now that you understand that there are stop losses, stop hunts, and then there are fake outs, which is coming from break zones of equal highs or equal lows, or is changing between break-off structures. You just have to find out where the low and the high of that structure is. That is it. Liquidities will obviously lie there. People will either enter there, put their stop loss below or above. So identify liquidity zones before trading. So that is one when you sit down. And we're going to be doing more of this. That's why I was speaking to Kema. In the next sequence, weeks ahead, we're going to be bringing you guys Market Watch, so that you can be able to understand the bias you need to look up for going into the week and the areas you need to be careful of as liquidity lies, so that you guys can understand. This is something we want to do for the community as well. So number 2 is always identify liquidity zones before trading. If you don't understand what all these things means, don't worry. We have the bootcamp coming up live soon. This bootcamp, 6 months bootcamp, is going to entail everything from market, technical analysis to market structure, every single thing, psychology, risk management, everything. Don't worry. Yes, I want to focus on teaching psychology only, but I still know some people don't know jack in this market yet. So we want to help people as well to understand it as well. Are you guys with me? Okay, good. Now, okay. So it's very important you guys understand this. So number 1 is shift your perspective. Number 2, always identify liquidity zone before trading. Number 3, wait for confirmation. Confirmation is, people sometimes talk, what does that mean? It means that keep close with your confluence. So your confluence now must have the complete confirmation structure from bias to entry area to a stop loss area. I'll give you an example. You see, if you want to, something like gold, back then 20 pips, 15 pips gold, sniper entry was great, but now gold 15, 20, 30 pips is somehow almost not enough because you can be stopped out easily. So the market conditions are changing, so adjust your strategy as well with it. It's just something that I would advise, just adjust. So if you know that back then you were taking 50 pips stop loss for your trades with your strategy, and if the market condition has changed, at least increase it a little bit to 60, 80 pips, and then adjust your lot size to make sure the monetary aspect is the same, right? So you need to be able to know how to adapt and adjust. It's very important. The same stop losses you were using 1 year ago, 2 years ago, it was not going to work in 2025. So a lot of things has happened in 2025, a lot. So number 3 is wait for confirmation. Number 4 is use a smarter stop placement, as I was saying. Smarter stop placement is basically you adjusting your stop loss based on every single thing as well. Then I think the last one I wrote down here is that practice thinking like a big player. Practice thinking like a big player. Over here, you need to be emotionally intelligent. You need to ask yourself, if I was the one that was doing this, what will I do? If I was the one that was basically trying to move 500 million of volume in a split second, or $500 million, whatever, what would I do? How would you behave? If you were the one that you want the cookie jar from the shelf, what would you do? If you want it all for yourself, what would you do? It doesn't mean you need to manipulate, but you are thinking. The Bible even says that walk circumspectly as wise and not as a fool. He says we should think like a serpent. It means that in this world, God knows. He knows that we will get to a point where we're going to see the world in a way that we think, it's all good. But God is saying, no. Walk circumspectly as wise, not as a fool. And then think like a serpent as well. Because in this world that you are in, there are wolves. Are you with me? So don't worry about it. These are the few survivor guide. I'm going to add more to it. But this is the good news, right? That even if you don't get every single thing here, you have nothing to worry about. All you have to do is to be subscribed to our newsletter. We'll show you guys how you can do that on the community tab. Then we will send you guys the framework. Okay? You guys will get a framework. So if you were not here before I started, I gave a very powerful announcement. Let me give it again. So one of the things that I'm doing now is that I know some people don't understand a lot of things, or maybe even if they understand, they don't know how to use it now. So one of the things that we're going to be doing is we're going to be giving you guys a framework newsletter. So every masterclass will have its own framework so that you will know, okay, Cliff, you spoke about psychology of inducement. How do I use it in my trading? How do I use it in my life? So we're going to send it all to you guys so that you can be able to understand how to apply the lesson you are learning. So if you subscribe and we have your email, it's quite very simple. You will receive the email from us, which will contain the structure of the masterclass, the light bulb movement you're supposed to get, and the practical framework, meaning how do you practically add it to your trading. We're going to give it to you guys as well. So all the masterclasses we have done before this, we're going to be sending them batch by batch. And then the ones that we are going to be doing in the future is going to come sequentially after every masterclass. Are you guys with me? So even if you didn't get everything, come back again and watch this masterclass. But also don't worry, we'll send you the framework so that you can understand. Ladies and gentlemen, I don't want to take much of our time. That's why I'm talking too fast. But I'm happy and grateful that at least today you learned something. If you did learn anything today in the market, anything from this masterclass, drop some ones in the chat. Okay. Okay, so the team is saying that if you learned anything today in the market, You can tag me on Instagram. For me, I will not force you to do these things. But if you think that you are being impacted by these masterclasses, tag, the people that you came on the masterclass with, Kema, myself, everybody, you can tag us, and we can repost it. The purpose of it is to make this masterclass aware to the people as well in this space. So guys, thank you so much for joining this masterclass. Expect the framework. If you are wondering how would you be able to subscribe to the newsletter, don't worry. Just check the community tab. We will put the QR code on there. You subscribe to it, and then you will get these newsletters. You're going to be receiving two forms of newsletters. One is the framework. The other one is case studies. So that you can be able to understand how your mind is working every single time in the market. With that all being said, psychology of inducement simply means what? You studying the things that can lead for you to be induced by the market. We spoke about emotional hooks and cognitive biases, and now I've given you guys few steps on how you can survive in this industry. Number one, shift your perspective. This is a business. Everybody wants to make money. Don't be naive. Number two, always identify liquidity zones before trading. Number three, wait for confirmation. Number four, use smarter stop placement. And then number five, think like a big player. With that all being said, thank you so much, ladies and gents. My name is Cliff Cheqona, and I will see you guys next week, God willing, and then we'll take it out from there. Peace out. God bless you all. Bye-bye.
Trading is a mind game.